Treasury yields extend declines. 10-year reaches session low. One minute ago now to be expect comments from a text from Feds Paulson. Ten seconds. Just seeing here, a senior Iranian official says Kurdish separatist fighters sought to create instability in Iran, take advantage of protest. Feds Paulson says still cautiously optimistic on inflation after CPI data, watching January data for tariff-driven price increase. A decent chance 3-month inflation ends 2026 close to 3%. Current funds rate level is still a little restrictive. I see further rate cuts later this year if forecasts are met. Inflation should be around 2% run rate by the year end. Monetary policy is a little restrictive right now. Baseline economic outlook is pretty benign. In 2026, greater clarity on what's driving the job market. The US is likely to grow around 2% this year. 2026, I expect inflation to moderate, the job market to stabilize. Not everyone is doing great in the US economy right now. The job market is bending, but not breaking right now. Again, Feds Paulson says that I see further rate cuts later this year if forecasts are met. So again, going back to the Iran news, so according to senior Iranian official, they say Kurdish separatist fighters sought to create instability in Iran, take advantage of protest. Armed Kurdish groups sought to cross into Iran via the Iraqi border in recent days, as according to 3 sources. SIBO volatility index at 4-week high, asked up about 1.53 points at 17.51. Seeing crypto stocks rise after Bitcoin hits over 8-week high. Coinbase up 3%, Strategy up 9%, and Riot platforms up 2.9%. Also, 10 minutes away from the top of the hour, expected to hear from about 5 minutes ago, to be expected to hear from Fed's Myron speaking on regulation and monetary policy. There is a video. We'll pop around the feed for you shortly. Also, remind as well, we get US existing home sales for the month of December. Forecast 4.22 million, prior 4.13 million, with a range of 4.3 million to 4.1 million. US existing home sales change forecast 2.18%, prior 0.5%. US business inventories month-to-month forecast 0.1%, prior 0.2%. Also, we could potentially get the Supreme Court opinion on tariffs at around the same time as well. And we have the US and Greenland meeting that's supposed to be happening today. No clear time of when that is supposed to be happening. So reminder with Fed's Myron, the text is to be determined, but there is a Q&A. So we have posted out the video of Fed's Myron on the video, on the feed for you to read through. One minute ago now to get the US existing home sales. And note, as said, no text is expected for Fed's Myron. We could also be getting the Supreme Court opinion on tariffs as well. Hegseth is to host Japanese Defense Minister on January 15th. 10 seconds. 4.35 million, 4.35 million, higher than forecast of 4.22 million, prior revised 4.14 million. US existing home sales change month on month 5.1%, 5.1%, higher than forecast of 2.18%. US business inventories month on month 0.3%, 0.3%, higher than forecast of 0.1%. So we have posted our Fed's Paulson's speech on the economy for you to read through. Also, the US existing home sales report is out on the feed as well. Skilled AI raises $1.4 billion, now valued over $14 billion. So skilled AI raises $1.4 billion in round led by SoftBank. So just again, a reminder for users well, hopefully we'll get some form of news about the opinions from the Supreme Court on tariffs. There's no specific time that it's supposed to be released. And there's no other news so far that's come from the Supreme Court to say whether they deferred it or not. So we're still waiting for something. Supreme Court doesn't rule on Trump's tariffs today. So again, Supreme Court doesn't rule on Trump's tariffs today. So again, that's the US Supreme Court does not issue ruling on the legality of Trump tariffs. Still waiting to see if what date they defer it to. But considering we were expecting it last Wednesday, they probably might do it for next Wednesday instead. But we'll see. Broadcom shares down 3.8% after Beijing tells Chinese firms to ban use of software from co-owned VMware. As a reminder from news in the morning, you had Beijing telling Chinese firms to stop using US and Israeli cybersecurity software. So VMware, Palo Alto Networks, Fortinet, and Checkpoint Software are among firms whose cybersecurity software have been banned in China. That was according to sources from news in the morning. According to TASS News, Putin and Brazilian president discuss Venezuela. US tells personnel in Saudi Arabia to exercise caution.
In 10 minutes' time, we're expecting the EIA crude oil inventories forecast a draw of 1.682 million, prior a draw of 3.832 million. EIA gasoline inventories forecast a build of 2 million, prior a build of 7.702 million. Distillate inventories a forecast of a draw of 0.662 million, prior a build of 5.594 million. And EIA crude Cushing inventories prior a build of 0.728 million. Also expecting comments from Bank of England's Ramsden.
So just a reminder with last night's API data, API crude oil stock change came in at a build compared to the prior of a draw of 2.8 million. So also a reminder for Ramsden, text is to be expected for him. There is a Q&A on record. Five minutes away until we get the EIA crude oil inventories forecast is for a draw of 1.682 million. Prior was a draw of
Check 1, 2.
3.832 million. Gasoline inventories forecast is for a build of 2 million. Prior was a build of 7.702 million. Distillate inventories forecast for a draw of 0.662 million. Prior was a build of 5.594 million. Crude Cushing inventories prior was a build of 0.728 million. We're also expecting text from Bank of England's Ramsden, seeing UK 5-year gilt yield the lowest since October 2024, down 4 basis points on the day. Also, UK 10-year yields falling to around 4.36%, the lowest since December 2024.
Sorry about the delay this morning. I was trying to get the stream up, and I was having issues with more AI stuff with YouTube. So I wasn't able to get ready for the show while I was working on it in the background. So just a few things here. If you were watching closely here, we did almost a near perfect pin strike down here. CJJ's used call a lot. You can see it right there. Now going higher. Nice sweep on the lows. I wish I could have bought that. I didn't have a chance to. One quick second here, guys. Oh, wrong one.
Further detail into US personnel in Saudi Arabia who were told to exercise caution by the US. The US mission to Saudi Arabia advises personnel and citizens to exercise increased caution in light of ongoing regional tensions. So it advises limiting non-essential travel to any military installations in the region. US mission staffing and operations are unchanged, and consular services continue as normal. 1 minute ago now, we'll leave
Hang
with
tight
the
here, guys. I'm
EIA
just trying
crude
to-
oil inventories. Also
running
remember,
around, my head
text
cut
is
off this
expected
morning.
for Bank of England's Ramsden.
I'm like behind this morning. Dude, they sent Ford back down this morning too?
10 seconds. Build of 3.391 million, a build of 3.391 million compared to the expected draw of 1.682 million. Gasoline inventories, a build of 8.997 million compared to the expected build of 2 million. Distillate inventories, a draw of 0.029 million compared to the expected draw of 0.662 million. Didn't see any reaction from WTI off the back of that data. Fed's Myron comments coming through here saying deregulation is to boost productivity and potential growth, and ignoring deregulation risks needlessly contractionary policy. Myron also added that Trump deregulatory push supports rate cuts. Also, Fed's Myron says perhaps 30% of regulation could be eliminated by 2030, cutting inflation by perhaps half a percentage point a year. Also, Myron adds that if central banks don't accommodate impact of deregulation, it makes policy too tight with needless damper on growth. Bank of England's Ramsden says for banks, we have implemented the key resolution policy developments that we expect to. Adding it's important our resolution regime responds to changes in the financial system, including the growth of market-based finance.
I'm not hearing Moran speak right now. I don't know where this is coming from. I got audio here in the
Ramsden
background.
says we have more to do to ensure firms and the bank are ready to implement a CCP resolution. Ramsden says we are considering what failure arrangements are necessary for systemic stablecoins.
Just a note that we're coming into the gamma flip right now. I think that's where the gamma flip is.
Θα ξεκινήσουμε, κύριε. Ευχαριστώ πολύ. Κυρίες και κύριοι, καλησπέρα και καλή χρονιά. Ladies and gentlemen, good evening and a happy new year to all of us. Mr. President of the Eurogroup, Mr. Minister of Environment and Energy, Mr. Governor of the Bank of Greece, dear Chief of the Hellenic National Defense General Staff, members of the Greek government, Your Excellencies, ambassadors, members of the Greek Parliament, distinguished guests, and friends of the Delphi Economic Forum, it is with great pleasure to welcome you this evening and to thank you really for joining us at this beginning of what promises, we hope, to be a dynamic and consequential year for the Delphi Economic Forum. Today's gathering, I think, marks an excellent start to our forum's activities for 2026, a year in which global economic and geopolitical challenges demand thoughtful dialogue, and responsible leadership.
We have
I'm
posted out the
especially
weekly EIA inventories
to
report on the
welcome
feed for you to read
Her
through.
Excellency, Ms. Kimberly Guilfoyle, the Ambassador of the United States to the Hellenic Republic. Madam Ambassador, as you know, Athens is a city of history, democracy, and enduring Greek-American ties. And we're delighted to welcome you almost at the outset of your mission in Greece. We thank you very much for coming. Your presence, I think, is a strong signal of the depth and the vitality of the strategic relationship between Greece and the United States. We're also privileged to host Dr. Stephen
Senate
Miller,
Majority
member of the
Leader
Board of
Thune,
Governors
speaking
of
to
the US
reporters,
Federal
says,
Reserve System.
I'm not sure I have the
At a
votes to
time
stop
of
War
economic
Powers Act
uncertainty,
vote today.
inflationary pressures, and rapid global transformation, Mr. Miran's insights into monetary policy and financial stability are of important relevance and of great interest. Dr. Miran,
Adding
thank
there are
you
no
very much.
boots
We're
on the
grateful
ground in
for
Venezuela.
being here. And allow me also to welcome and thank Alex Papachelas, one of the brightest minds of this country, the Executive Director of Kathimerini, for chairing today's discussion and guiding the conversation later. At the Delphi Economic Forum, our mission has always been to create a trusted space where policymakers, leaders, and thinkers can exchange ideas with candor and foresight. Tonight's program, I think, reflects that mission and sets the tone.
We have posted
for
out
this year
Bank of
ahead.
England's Ramsden
Thank you,
speech
all of you,
on the
for being
feed for you to
here.
read through.
And please join me, truly, to welcome to the floor the United States Ambassador to the Hellenic Republic for her opening remarks.
Good evening, ladies and gentlemen, Minister Piriakakis, Minister Papasavru, fellow ambassadors, distinguished economists, and
got
friends
Moran on
from
right
the
now.
banking and financial community. I would like to thank Simeon Samokas and his team at the Delphi Economic Forum for convening us all today for this amazing occasion. It is truly a pleasure to welcome such an accomplished audience, an audience that understands markets, policy, and the global forces shaping our economic future. And it is especially meaningful to gather in the spirit of the enduring partnership between the United States of America and Greece. Two nations bound not only by history and shared democratic values, but by deep and growing
We have posted out
economic
Fed's
and
Marin's speech
strategic
on the feed for you
ties.
to read through as well.
The U.S.-Greece relationship is strong, and it is forward-looking. Our bond is rooted in trust and a shared commitment to stability and prosperity
That concludes
for our
comments
people,
from Senate Majority Leader
principles that
Thune.
matter deeply to everyone in this room. Tonight, we have the distinct privilege and pleasure of hearing from a man whose words speak directly to those principles and shaping global economies. Dr. Stephen Moran is one of the sharpest economic minds shaping these policy discussions within the United States government. His work on the Federal Reserve Board of Governors sits at the intersection of rigorous economic analysis and real-world decision-making, touching the lives of all of our citizens. Dr. Moran brings a powerful combination of intellectual depth and practical insight. He understands that central banking is not just about models and metrics, it's also about people. At a time when countries are navigating inflation, growth, and ensuring their citizens have good jobs and can afford to live dignified lives, voices like Dr. Moran are essential. He is one of the most important and influential economic thinkers in Washington, one who the president relies on. His research and experience have informed conversations and policies on financial stability, macroeconomic risk, and the evolving role of institutions in an increasingly complex global economy. Tonight's lecture promises to challenge us, to inform us, and to inspire thoughtful debate among professionals who care deeply about sound policy and global cooperation. That spirit of open exchange is something Greeks and Americans both cherish, and it is exactly what gatherings like this are all about. It is my great honor to introduce my esteemed colleague and my dear friend, Dr. Stephen Marin. We are so lucky to have him here today. Please join me in extending him the warmest of welcomes. Thank you.
Just a heads up, Feds Mara now speaking of the
Thank you,
Delphi
Madam
Economic
Ambassador,
Forum.
for the
Remember, the video
introduction,
is
and
on the
thank you
feed.
to the Delphi
It's
Economic
also on the
Forum for
left-hand
the
side of the
opportunity to
economic
speak today.
calendar. What is the name?
My topic is the implications of deregulation for monetary policy, an appropriate one for this setting. Greece's recovery from the crisis that began in 2009 was only possible after the Greek people implemented substantial and painful reforms, including alleviating suffocating overregulation in many sectors. In addition to the other reforms embraced by Greece, deregulation freed businesses to compete domestically and internationally and promoted individuals' access to the economy. The range of reforms has included liberalizing product and service markets, easing licensing and administrative burdens, opening previously restricted professions, and increasing labor market flexibility. The government liberalized electricity and gas utilities, privatized airports, ports, and utilities, and reformed bankruptcy procedures and other business laws. While it is challenging to quantify how these deregulatory actions have affected the economy, there is little doubt that these reforms have supported a remarkable return to economic growth and higher living standards. Macroeconomic stability has returned to Greece. Unemployment has fallen to its lowest level since the global financial crisis, and investment and exports have rebounded. Product and labor market reforms helped restore competitiveness, reduce unit labor costs, and encourage firm entry. By easing the ability of supply to respond to prices, these reforms have improved the transmission of monetary policy. While monetary policy is set by the ECB, its transmission varies in part with how national governments manage their economies. Long-term Greek borrowing rates have narrowed their spread to Germany's, now below 1%, compared with 6% a decade ago. Greece has come a very long way, impressing the whole world with its recovery. For all of the conversation around Mario Draghi's report, Greece shows that well-targeted deregulatory reforms can help lay the foundation for more sustained and robust economic growth by expanding the productive capacity of the economy, known as the supply side. Such sustainable increases in actual and potential growth have different implications for monetary policy than purely cyclical growth spurts, which boost growth in the near term without raising economic potential. These jolts can create substantial inflation, undermining growth in the medium term by forcing central banks to raise interest rates, and also in the long term by causing a misallocation of resources. Recent experience has reinforced the need for central bankers to fully consider the broad range of non-monetary factors that could affect the appropriate stance of monetary policy. One such factor that is especially important at this juncture is the regulatory burden borne by businesses and individuals, which has begun to recede in the United States in the last year. I believe that the sweeping deregulation underway in the United States will significantly boost competition, productivity, and potential growth, allowing for faster economic growth without putting upward pressure on inflation. This would support continued easing of restrictive monetary policy, but ignoring these effects would result in monetary policy that is needlessly contractionary. One challenge for central bankers in fully incorporating deregulation into their economic outlooks is that it is difficult to measure in aggregate. Economists are inclined to study things when there are quantitative data to illuminate their work, a version of the famous lamppost problem, of only looking where the lamppost shines. This may have contributed to a tendency to give short shrift to regulation in judging the economic outlook. Quantitatively measuring regulations is more difficult than measuring taxes, subsidies, or interest rates. Regulations that businesses face can vary enormously based on the sector, size, and sometimes even age of a company. Some regulations ban activities altogether. Some regulations impose fixed or variable costs for complying. Some regulations affect consumption decisions, and some affect production. Regulations can vary enormously across jurisdictions and sometimes within jurisdictions. Additionally, enforcement determines how binding regulations are in practice, and enforcement can be even harder to measure than the effects of regulations themselves. These measurement challenges are evident in the abundance of economic studies on specific regulations, but the much smaller volume of work that tries to comprehensively measure the aggregate effects of the accumulation of regulations on the macroeconomy. From the perspective of an individual firm, it may be easy to adjust behavior in response to one regulation, known as a margin of adjustment, but compounding regulations can constrain the ability to shift costs by hitting multiple margins of adjustment all at once. One pebble doesn't stop a stream. Water can flow around it.
According to
But
New
pile
York
enough of them
Times,
up,
the US weighs
pebbles will
expanding
collectively
private
stop the stream.
companies' role in cyber warfare.
A common approach to quantifying the effects of regulations is to count the number of pages of new regulations, though this does not account for varying economic significance across pages. Another approach is to count the number of work hours required to comply, as reported under the Paperwork Reduction Act. However, there is
Together,
wide
it's the US
variation in
weighing
how
and
different
listing
regulatory
private firms
agencies
to
produce these
assist
cost
cyber
estimates,
attacks.
even sometimes variation within agencies, and more importantly, the counting of work hours related to the PRA does not capture the full opportunity cost of the regulations. That is, how the lost hour of work could have been used more productively, or the firms and industries that don't exist at all because of the regulation. If a firm needs to hire a person to comply with some new regulation and can't hire a sales associate who could generate new business, or can't engage in a productive activity at all, then the foregone opportunity can be significantly larger than the wage for compliance hours. There has been some progress in measuring regulation through advances in natural language processing and artificial intelligence, and I expect more of this to come. For instance, Patrick McLaughlin's QuantGov project at Stanford University's Hoover Institution uses computational tools to move beyond regulation page counts toward counting restrictions and obligations imposed by the text and quantifying regulations by industry. In other work, Joseph Kalmenovitz uses machine learning methods to count and separate regulations that are relevant for a firm's core business opportunities from those that are not relevant. These measures show a substantial drop in the number of rules in 2025. Among other deregulatory efforts is the current US administration's 1 in, 10 out policy, revoking 10 old regulations for every new one adopted. Based on the pace of the administration's deregulatory efforts in the first part of 2025, I estimate that if this pace continues, 30% of the regulatory restrictions in the Code of Federal Regulations will be eliminated by 2030, though this may prove to be an underestimate. Regulations can have far larger consequences for the supply side than, for example, taxes, because they amount to outright prohibitions and thus function as infinite taxes. Quantity controls are usually far more damaging economically than those that directly affect prices. Consider agglomeration, when a group of firms in the same industry benefit from proximity, such as R&D labs being near to production plants or clients and customers. An auto parts producer benefits from being close to an automaker. Environmental or other restrictions that restrict co-location can affect the entire economy's supply side by preventing the agglomeration necessary for an industry to be profitable. Take one piece of an industrial ecosystem away because of regulation, and the rest become harder to sustain. Supply chain ecosystems exist, or don't, because of regulations determining what activity can take place and where. I think it is hard to argue that, say, the excess burden of going from a 30 to a 33% marginal tax rate has the same effect as a regulation preventing an entire industry from existing domestically. Regulations, particularly those that affect physical production, can force the economy from high productivity sectors to low productivity sectors by encouraging capital-intensive production to move to less regulated places like China. Research on the effects of regulation on the supply side of the economy has developed along two major lines of inquiry. The first studies regulations' effect on total factor productivity, or TFP, and economic growth by making production more expensive. If regulations make, say, electricity or manufactured goods more expensive to produce, they lower TFP, productivity. Regulations can also distort investment decisions across sectors or impede innovation, leading to an economy-wide misallocation of resources with commensurate effects on aggregate productivity levels. An alternative way of modeling regulation is via its effect on free entry and markups. Regulatory
stocks
costs
extend
that appear
full,
as marginal
S&P
from an
500
industry
down
perspective
1%.
often originate as fixed costs from a firm perspective. An existing home builder building one more house may be marginal, but for a new entrant to build it, they would have to invest in a vast compliance infrastructure. In many jurisdictions, they'd have to learn how to measure carbon emissions, decipher labor regulations, pass various inspections at various stages, and pay other fixed costs. The barriers to building a house have become so burdensome that many builders exit entire markets, leaving numerous large metro areas without desperately needed supply. As such, regulations often serve as barriers to entry, with all the attendant consequences: reduced competition, artificially high returns to scale, higher markups, reduced innovation, and reduced productivity growth. Let's call these markup regulations. There is abundant evidence, both within and across countries, that increased regulation causes reduced firm entry, decreased competition, and lower investment, all consistent with these elevated fixed costs of operating. Decreased firm entry, competition, and innovation lead to a malaise familiar to many. Formerly dynamic industries calcify, flagship businesses choose to move elsewhere or shutter completely, and communities feel cheated out of their way of life. Now let me discuss the implications of regulation and deregulation for monetary policy. Most theory and research suggests that increasing the regulatory burden reduces productivity and thus puts upward pressure on prices. This is intuitive. Regulations impede production, and deregulation removes those impediments. More production means lower prices, and vice versa. But gauging the magnitude of these effects can be difficult. Work by Dustin Chambers, Courtney Collins, and Alan Krauss found that a 1% increase in US federal regulations in a particular industry is associated with a roughly 10 basis point increase in consumer prices in that industry, and that is only in the near term. Longer term effects and effects from more substantial changes in regulations are, in my view, likely to be substantially larger, since firm entry and the effects of increased competition develop over time. Supply chain ecosystems can take years to rise or fall. I'd also expect cross-industry spillovers to boost aggregate effects above this level. But even these modest within-industry, short-term effects would be substantial in the context of the potential 30% decline in the regulatory code that I projected earlier. This implies a cumulative drag of roughly 3% on the consumer price level through 2030, a little over 0.5% per year. What happens in the short term depends on various factors: the types of regulations involved,
Seeing the S&P
the way these
500
regulations
extending
affect
decline
firms
to
and
1%,
households,
Nasdaq
and the manner
100
of enforcement.
falling
On
1.6%.
balance, I believe the substantial deregulation that has occurred in 2025 will continue over at least the next 3 years and be a large positive shock to productivity that will put downward pressure on prices. On net, this supports a more accommodative stance of monetary policy. As I've argued, I think the primary effects of deregulation are on the supply side of the economy and have the effect of increasing potential output more than they increase actual output. For example, if the number of goods I can produce is effectively limited by a regulation and that cap is removed, this means I can produce more. If demand increases and production is limited by regulation or some other factor, then prices increase. If demand rises and these shackles have been removed, then output grows and pressure on prices is much smaller. While I think of regulation as primarily a supply-side factor, it can affect demand. For instance, the news of planned deregulatory action can stimulate investment now for future production, increasing aggregate demand and prices in the short run, before prices adjust to the lower level that would prevail over the longer run. However, I see little reason to expect the short-run effect on demand will exceed potential. In an earlier speech, I assumed that deregulation immediately increases actual output half as much as potential output, and then the two converge over a few years. While some approaches assume TFP shocks increase actual and potential output by the same amount, work by Olivier Quabion, Yuri Gorodnichenko, and Mauricio Ulate shows that a structural approach to modeling the supply side results in potential output overshooting actual output in response to a TFP shock. Of course, this matters because the output gap is a primary input into calculating the appropriate setting for monetary policy. If actual output falls below potential output, there is slack in the economy that could be accommodated by looser monetary policy. If deregulation boosts potential output above actual, the correct response is to cut interest rates. At the same time, by increasing the marginal product of capital, deregulation may raise the so-called neutral rate of interest at which monetary policy is neither accommodative nor restrictive. I addressed this in an earlier speech, my first speech as a member of the Federal Reserve Board. Turning to markups, the second channel for the effects of regulation on the supply side, models indicate that if monetary policy ignores the deflationary effects of deregulation, then we risk causing an unnecessary contraction in the economy. That is the implication of an important 2014 paper by Gaudy Egertson, Andrea Ferrero, and Andrea Raffo, which models deregulation as a reduction of markups, meaning increased competition, in a standard new Keynesian model. They find that the appropriate response of monetary policy is to reduce interest rates in response to this type of deregulation shock and offset its consequent deflation. If for some reason monetary policy fails to do so, then deflation and economic contraction needlessly result. This model implies that if the Federal Reserve fails to reduce policy rates in response to deregulation, there will be adverse
U.S.
consequences.
States International Trade
Greece's
Commission
experience testifies to
starts
this.
Section
Had the
337
ECB
probe
not
of some
implemented
wearable
exceptionally
devices.
loose monetary policy and effectively accommodated Greece's structural reforms, the outcome for Greece would have been quite different. The outcome for the Eurozone would have been quite different. I believe that central bankers should be paying close attention to the effects of regulation on productivity, output, and prices. In recent quarters, policy has been tighter than it should have been to reflect significant deregulation, lifting potential growth and reducing inflation. Going forward, I expect that the ambitious deregulation underway in the United States will boost growth without boosting inflation and be one factor supporting a further easing of monetary policy. In this regard, Greece and the ECB have lit the path and shown us the way. I've raised this point with my Federal Open Market Committee colleagues, and I expect to continue to do so as our deliberations proceed. Thank you.
Well, I want to thank, first of all, the Delphi Forum for this opportunity and this invitation. It's another slow news day, as you know, Dr. Miran. I want to welcome you in Greece. We'll try to make some news, but the news landscape is saturated these days, as you know. You are one of the masterminds of the Trump economic policy. Also, legend has it anyway. So if you can explain to us the reasoning behind tariffs. I mean, obviously one reason is to level the playing field in terms of competition and so on. But I guess there's another reason which says that, you know, production, especially by US firms, should come back to the US through this system. Could you sort of elaborate a bit, you know, what the purpose of tariffs is and whether it's working so far?
Well, is this on? Okay. Yeah. Well, I think perhaps you give me too much credit and also refer to work that I did in my previous job, not while I was not at the Federal Reserve. I think that there was a variety of goals behind those things, and I think that when you look at what tariffs have done thus far, what the effects have been. As far as the central bank and monetary policy is concerned, I think there's no doubt about it that tariffs have had some consequences that we have to take into account as we make our outlook and as we decide what the appropriate settings for monetary policy are. I think chief among those has been an effect of raising revenue, which has served to underline and stabilize financial markets, and particularly treasury markets and interest rate markets. As you know, the world gets bouts of concern over the size of deficits, and I think by reducing that, it's reinforced stability. By reducing deficits, this Congressional Budget Office estimates over almost $4 trillion over a decade, something like that, for the effects of tariffs. And I think by bringing in that revenue and stabilizing, helping to stabilize bond markets, they've helped to stabilize financial markets, which of course matters for us. I've also spent a lot of time discussing how the revenue from tariffs has lowered what we would think of as the neutral interest rate by adjusting the national balance of savings over minus investment. And then, of course, there's effects on inflation. I've spoken a lot about that as well. About a month ago, I gave a speech on inflation where I analyzed that I do not view tariffs as having driven material inflation in the United States. For a variety of reasons. I think that a lot of the people who do make that conclusion do so because they compare goods prices to some sort of trend that was occurring before the pandemic. In my mind, if you compare United States goods inflation to goods inflation elsewhere in the world, it doesn't stick out, which is something that you would think would happen if tariffs are driving inflation in the United States. Or if you compare imported core goods versus overall core goods in the United States, again, there's not really a material difference that would make you think that tariffs are driving some sort of significant inflation in the United States. So I think as far as monetary policy goes, those are the things that tariffs sort of really matter for. As far as the other stuff, I think that there was a lot of what you were saying behind organizing those tariffs and implementing those tariffs, and we'll see how they develop. But as central banker, I have to stick to central bank issues.
But let me just elaborate a bit more about this. Whether you think the global trade system has reached a new equilibrium, or you think there will be another round of tariffs needed?
Oh, I mean, it seems very clearly that the volatility in trade has gone down materially over the last 6 or 7 months. I think there's no question about that. I mean, the United States has reached trade deals with, about more than two-thirds of our major trading partners. Not including China. I mean, I think that's very substantial, and we sort of continuously hear about new trade deals being worked out. It seems no doubt about it to me that volatility associated with international trade has declined materially in the last 6 months. Things seem to be much stabler now. I have no doubt that we'll get continued little bouts of news flow and continued shocks to those, but I think there's no doubt that we're very past the peak of this volatility.
Let me ask about China, because one of the intended purposes was to try to limit trade by China. This morning I was reading in the Wall Street Journal that their trade surplus has gone up to 1 trillion or whatever, more than 1 trillion, and that basically trade has increased for China with the rest of the world, not with the US, by 20%. Are you concerned about that?
Well, I think that you're pointing to one fact that shocked me is that the Eurozone now has a larger trade deficit with China than the United States does, right? And so this was a shocking thing to me when I learned it a few weeks ago. I think it does have consequences that matter for monetary policy, because international demand, it really is an input into how we think about the development of the U.S. economy and the way that we would set interest rates in the United States based on employment and inflation in the United States. And to the extent that sort of the Chinese export of cheap goods is destroying demand in a place like Europe, that would lead to decreased trade with the United States, decreased demand from for U.S. goods. I mean, I think it absolutely is something that would affect growth and inflation in the United States. I mean, to put it another way, a lot of international price trends are a lot of inflation trends are international, in essence, right? And there's a reason why inflation has, for many periods of time,
According to Punchbowl News, Hawley's to vote to end war powers resolution effort.
China increasing its export of goods to places like Europe, to other U.S. trading partners, very much has an effect on the international economy that is absolutely one that matters for inputs into the United States.
Goods inflation seems to be pretty stubborn.
Senator Hawley, or one of the 5 Republicans who voted to advance the war powers resolution last week, tells a reporter that he will vote with GOP leaders on a procedural maneuver to kill the effort.
I talked a moment ago about how I don't think tariffs are driving goods inflation for some of those reasons, as well as other reasons like the bottom in goods prices and the increase in goods prices happened in the middle of 2024, right? So unless somehow these goods prices were looking ahead 9 months, it stretches credibility in my view to think that tariffs are in light of all that evidence, to think that tariffs are driving goods prices. So then I'm left with the question of what is driving them, and to me it's an open question. I don't have an easy answer to that. I think there's a few possibilities, none of which are really that satisfying. It's possible that it's a combination of those possibilities. One is that it's just more continued post-pandemic bullwhips, right, where we had surges in prices and then prices came down and inflation came down in goods, and then we had another surge in goods prices. It could just be oscillations. It could be that they'll mean revert down in light of those. It also could be that it's due to other international developments that are not tariffs, right? We've had increasing use of export controls in the high-tech sector, in critical mineral sectors. Those have existed for many years now, right? They didn't occur in April. They weren't invented in April of 2025, right? Those restrictions have been in use for many years. China implemented its law around rare earth restrictions in 2016, right? And even though they've ramped up implementation of that law in the last year, those laws are almost a decade old at this point. And then, of course, there were many years of increased tech restrictions prior to the introduction of tariffs. So, and the COVID experience as well, of not being able to source necessary medical equipment in the middle of a national health emergency. So I think it's quite possible that there have been all these disruptions to international trade that have been going on for many years and are driving goods inflations higher. And I think it's an easy, facile, and lazy conclusion to blame all of that change on tariffs, when in fact there have been many changes to the international trading system. Tariffs are only one part of that. If that's the case, it's possible that goods inflation stays elevated for a longer period of time. And to be clear, I don't know that this is the case. I want to see more research on this. I want to see more studies on this. If it is the case that goods inflation stays higher for a longer period of time, then that's potentially a problem. However, it's not a problem that I'm too worried about from a monetary policy perspective, because I see so much disinflation coming from other parts of the index. When you look at market rents in the United States, they've been growing at a 1% rate for 2 years. Measures of all tenant rents have finally caught up to measures of new tenant rents. That means that there's going to be exceptional disinflationary pressure from shelter in the pipeline. Non-housing services are also going to revert down because they'll ultimately follow the labor market, and because certain peculiar categories, like the way portfolio management services are calculated, they basically just track the stock market, right? Which means that there's no reason to expect a enormous duplication of the outsized portfolio management service contribution to the inflation index again following years. So I see a lot of disinflation coming from services, both shelter and non-shelter, in the future. And so I don't know that it's the case that goods prices will stay elevated for a longer period of time. But if they do, I think it's okay. Because there's so much disinflation coming from elsewhere. One point that I think it's important to make is that if I end up being right about shelter, that there's a lot of disinflation in the pipeline from shelter because of the stance of market rents, and I end up being wrong about goods prices, and say tariffs really are driving goods prices higher, and then that means that the tariffs are a one-off increase in the price level, and the inflation rate in goods comes down after that. If I end up being right about shelter and wrong about goods, that means that we're going to really undershoot our inflation target. In other words, two-sided inflation risk around the inflation target is back on a forward-looking basis.
Now, is a weak dollar a good or a bad thing?
From a central bank perspective, I think stability in financial markets, stability in international financial markets, is important, is the most important thing, and so that sort of transcends weak or strong. They both, weak and strong, both have consequences for economic growth, for inflation, that we would take into account when we set monetary policy, because they can affect growth, they can affect employment, they can affect prices. But I think overall stability of financial markets is something that is of more concern from a central banker's perspective than a level of the dollar, weak or strong.
And we see that the
Google say Gemini
non-banking
introduces
financial
personal
sector
intelligence.
is growing in importance. Do you think there's a need for regulation there, like crypto and other?
Yeah. So my perspective. So as you heard, I have a general view that less regulation is better for economic growth and leads to better price.
I think that was music to the ears of this audience. Yeah. For sure.
Yeah. I have a general disposition in that direction. You may have gleaned. With respect to private credit markets. I think a lot of the growth in that sector has been a form of regulatory arbitrage. Not all of it, but a lot of it has been a form of regulatory arbitrage, where we've over-regulated the banks so much. Look, arguably before the global financial crisis, the bank, maybe there was not enough regulation. That's why we had the global financial crisis, potentially. It contributed to it. But I think then we overreacted in the other direction, and we implemented way too much regulation on the banking system, and that meant that it only really became profitable to make a lot of those loans outside of the banking system, because the balance sheet cost, the regulatory cost of making certain types of loans became too big, and so banks retreated from those markets, and private credit stepped in to fill that void. And in some ways, the growth of private credit, the growth of some private markets, has been a form of regulatory arbitrage, where it's not necessarily that it makes more sense from an economic relationship between borrower and lender to make a loan in this way, but it makes a lot of sense from a regulatory perspective. And my view is that regulatory arbitrage is bad. Right?
Reports say that Tesla is struggling to offload about a third of the initial vehicles it imported to India last year.
Know what's best for them, and if a borrower and a lender agree that it's best that this loan be made through a bank, great. If they agree that it's best made through a non-bank, great. But that reasoning
Further
shouldn't
detail
be
into this,
because of regulation.
Tesla
right?
is
The
struggling to
government should not
offload about
be
a third of
scale
the
to tilt
initial
economic
vehicles it
activity from
imported
one
to India
sector, one
last
form
year,
of lending versus
as some
another, right?
prospective buyers
So
who made
my
early
view is that a
bookings
lot
have
of the
backed
growth
out,
there has been
according
as
to
a
people
result
familiar with the
of
matter.
overregulation in the banking sector. And I think that we've been making a lot of progress on peeling back some of the overregulation in the banking sector. Vice Chairwoman Bowman has been doing a marvelous job modernizing and right-sizing the banking regulatory apparatus. And I expect a lot more of that to continue in the future. So my expectation is that a lot of the success of a lot of the retreat of banks and a lot of the private credit markets will return back towards whether it makes economic sense or not. And if it makes economic sense for this lending to happen in the non-bank sector, that's great. It's fantastic. And if it makes sense for it to happen in the banking sector, that's also great. That's fantastic. But it shouldn't be because of regulation.
There's been a lot of talk about the potential correction in the markets, AI bubble and all that. Are you concerned about any of this?
It's always a risk that there's corrections in financial markets, that there's moves in financial markets. I don't necessarily know that I have any edge in predicting the right valuation for AI stocks. If I
maybe AI has the answer.
Yeah, exactly. If I did, I'd probably be doing something more lucrative than government work. I don't think it's an area that I really have a good edge in predicting. It's also one that I think it makes sense from a central bank's perspective to respond to after it happens than to try and act in advance. I think it requires a lot of hubris to know that to believe that we know better than financial markets where fair values on equity valuations are and on revenues and PE multiples. So I don't know that it's not one of the risks that keeps me up at night.
Now, some people are worried that the US dollar is going to lose its world standing, let's say. Are you concerned about that? Because we live in a very polarized world, and once the dollar is used in terms of sanctions, tariffs, and so on as a tool of policy, some people think that it might lose its credibility or its standing, let's say.
I think that's a story that's. As a journalist, that's a story that probably generates a lot of clicks, right? But I don't.
We get paid for that. So.
You get paid for it, but I don't think it's a story that has a lot of meat on the bones. I think that the use of the dollar internationally has been fantastic. I argued in a speech a few months ago that the introduction of stablecoins will actually reinforce the international role of the dollar by allowing people in jurisdictions where they don't have access to dollars, where they don't have access to dollar vehicles because they're behind capital controls or because they don't have banking services. It will allow more international use of the dollar. That will only reinforce it. So I'm actually pretty optimistic on the international use of the dollar. I think there's been a lot more noise than there's been any actual movement on that subject. And I think at the end of the day, sort of capital follows economic growth. Economic growth creates investment opportunities, and I think that the best thing would be continued strong economic growth in the United States. That's in my forecast. I do expect continued strong economic growth in the United States. In part because of the shifts in regulation, in part because of AI, in part because of other economic developments, other economic policies, and that strong growth is going to ultimately suck in a lot of capital. So it's really something that I think has been more clicks and more doomerism and clickbait than actual meat on the bones there.
I want to come into an issue which is very hot right now in the US and around the world. A lot of people say that the standing of the dollar was derived by the institutional integrity in the US in terms of the Fed, its independence, in terms of statistics, how they're measured, and so on, and the rule of law kind of issues. So they claim that the standing of the dollar is going to be sort of demoted, let's say, because of changes in those institutions. What's your response to that?
I think that's. Look, the logic follows if you believe the premise, but the premise is absurd.
Fed's Myron says introduction of stablecoins will reinforce the dollar.
Very strong. And what matters at the end of the day is whether policy is good or bad. And capital flows ultimately follow economic growth. They ultimately follow the returns on capital. And if the returns on capital continue to be good because the economic growth is good, because policy is good, because policy is the right settings, then that's not something that worries me at all. So I think, again, it's a story of people, writing things for clicks, writing things for attention.
Myron
rather than
says
they're actually being
institutions
written.
of the US are strong.
And
What matters
when our
is if
fellow Greek,
policies are good
Greek
or
American,
bad.
whatever, Jamie Dimon says that the decision of the Fed and the prosecution of the Fed chair is going to affect inflation. Do you buy that?
I don't really buy that. I think that inflation is very much headed in the right direction. I think that we've got 2 years of market rents in the U.S. growing at a 1% rate, which is well below.
Myron says
the
stories about
pre-pandemic
risks
rate. I think
to U.S.
shelter inflation
institutions are from
is headed
people
to below
looking for
pre-pandemic
clicks.
rates. I think that goods inflation is not going to go much higher. I think that non-shelter services are going to come down as well. And so unless unless these conditions somehow sort of make the real estate market way tighter, and people start bidding up apartment rents like crazy left and right, there's no way that inflation is going to actually move higher from that. Inflation's on the right trajectory. It's coming down. The mechanics of all the components are in the right place. And this other stuff is just noise.
Since we're in the
Myron says threat to Fed
clickbaiting
won't drive
domain,
inflation.
Let me ask you
Now,
about
this
your
is in the
response
Q&A
to a
part
letter that
with
was
Fed's Myron
signed
in
by
Athens.
10 central bankers of major Western institutions, including the ECB head and so on, criticizing the charge, the investigation into the Fed's activities and so on. Your response?
I mean, look, I don't think it's appropriate for central bankers to get involved in non-monetary policy issues in their own country, and I think it's even less appropriate in other countries. That's all I'll say.
But doesn't it worry you that these are some of the major allies of the U.S. where this criticism is coming from?
No, I mean, no. I believe in always advocating for what I think is the right policy, and that's what I always do in monetary policy. That's what I always do in my previous life when I was dealing with non-monetary policy issues. I always focus on trying to do what I think is the right thing, and what other people say is what other people say.
And the last question is, are you still proposing a 150-point cut in the interest rates in 2026?
Listen to this
and
closely
is that going
here.
to happen?
I mean, at current, that's what my projection for appropriate economic policy is, based on my conception of things that have happened to the neutral rate. So, for example, last year 2 years ago, we had very, very strong population growth. Now we have very, very low population growth that lowers the neutral interest rate as we have abundant cross-country evidence that occurs. It was only
He's like saying one thing and then saying another. He's like, he's basically saying he wants to cut rates because inflation's about to bottom.
Dynamics. I don't think that those economics ever stop being true. It's just that we got distracted.
Fed's Myron reiterates the need for 150 basis points of cuts this year.
States, thanks to the change in immigration policy, has really
Well, he's only got a window to do it for
low.
like now
I
into
think
summertime.
policy should be lower as well because of the inflation path that I just described before.
Because he knows that
and I think the
inflation is
policy
going
should
to
also be
rear
lower,
its fucking head this
because
summer.
of steps that are taken to expand the supply side, like cutting like the reduction in regulation. If you expand the
we're
supply
there
side
right
beyond
now.
Demand, you create an output gap. And if there's an output
we're
gap, there's a
not.
reason
Oh, hold
to
on. Let me just look at this.
To accommodate that.
I mean, we're at a
Myron
bottom
says
of
inflation is
right now.
coming
the
down.
150 basis
The other
points
stuff is just noise.
That are my projection for appropriate economic policy, appropriate monetary policy for the year are a result of my
Here, I'll show you guys
analysis
some here.
of the output gap, the neutral rate, and the inflation path. Of course,
theoretically,
that
we are
projection
bottomed in
will
inflation.
change as developments occur in
it's-
policy
it's
that would affect
like,
the economy, as developments occur in economic data, as we get more data on inflation, as we get more data on unemployment. I will absolutely revise my view. And in the September set of projections, my
He's
projection
only
for the
got,
end of
like-
this year was only 100 basis points, right, instead of the 150. I changed my
That doesn't mean the market
projection in
won't
response to
go
the
up,
information
but
that
he's got
developed
like
between
his
September and
window
December,
for
and I
cuts
have no
is
doubt
very
that
small.
I will change it again in response to new information that develops between now and the next set of projections.
Last question.
So he's trying to
How does
juice
the Greek
it.
story look from your vantage point?
Well,
Here, I'll show you guys an inflation chart really
I focus
quick.
on the U.S. economy predominantly, so why don't you tell me?
We're almost a boring country, and a success story we don't believe in. I mean, it's kind
He's
of.
kind of like double
Come on, you're
speaking right
you're
now.
a huge success story in terms of the
That's what I'm saying, yeah,
turnaround.
well,
The growth in Greece seems to be very dynamic and very strong compared to other parts of the
I agree.
Eurozone compared to other parts of the world, I would hardly call this a boring economy.
I mean, politically boring. We hope we're becoming politically boring, not economically boring. Anyway, thank you. It was a pleasure. Thank you.
Thank you.
It's a weird speech and discussion. He was doing a lot of double speak in here. We are holding on to the used call lot up here. Let's go up here and look.
No, we don't need that.
I mean, you know, when you're
that these days so much.
when you're
Now, our big issue, so I've got us here going, I'll show you this here. So you can see the larger trend here. I've got us here going up. We did not get a SCOTUS ruling this morning, and also financials are dragging us down. Now, one big issue here is we opened this morning path lower. Get rid of this. By trading this tick right here. This has opened a door to go lower. I don't know if we're going to go lower right now, but there's a fair chance of it happening. At least sweeping this this gap down here. Just a note that the door is open down below. We had some really wonky gamma this morning. It was kind of looking lopsided to the downside. It's since resolved itself, but this morning there was a lot of downside open to.
On this episode of What's Going On with Shipping, Nicolas Maduro is in U.S. custody.
We don't necessarily need to go down there and close this stuff here. This is support right here. This is actual support, regaining it again. But let me show you a couple things here. I was looking at this morning. Hopefully it's still showing here. And it's not. I was working on it on another computer, but I'll show it to you. Or maybe it's on SPY. Let's see what's on this one here. Yeah, it didn't transfer over. I do want to show you one other thing here, which is I'll just show you only need to see JPM. You don't need to see anything else, but let me just show you this here. Do you see this? Do you see this? Do you see this? See how SPOOS is only down slightly? And yet you have a see this. I don't know if you can see this here, but this isn't gonna hold on a second here. Just looking at this right here, you can sometimes see financials will sometimes give you a prior look to a bloodbath. So like financials will begin rolling and then SPY will roll after. Not always, but sometimes. You can also see here JPM came up. We kind of like blasted down same time. But whenever you see this right here, and you see how there's a divergence between SPY and financials, we're looking for two things. We're looking for a SCOTUS opinion, and we're looking for a resolution to credit cards being at 10%. That's never happening, by the way. But Trump said that does not resolve until the 20th. So this divergence is fine if you got a SCOTUS decision. They cut tariffs and the market goes boom. It would at least hold us up a little bit, but and then by the 20th, you'd have this come back up and come back in line. But this divergence here is not good. You can see it right here. It's just not good right here. Whenever you see these divergences on financials and no bullish triggers, it's kind of weak. So this isn't good at all. This kind of like this is telling you that we're weak right now. Not only that this is showing December 10th right here, just so you can see this right here. And if we go back to this December 10th, go back to an hour.
So just a
December
reminder for
10th
later
low
on
is
in the US
right in
session.
here. You can kind of
At
see
2
it
p.m.
right here.
Eastern time, Trump is to sign a bill allowing schools to serve whole and 2% milk.
Just get back in here, right in here. You can see this like dump that took place in here. So if you were looking at this dump right here, it kind of like
Bank of England's Ramsden says removing ring fencing of
this
banks
seems
would be
like
a
the
real
most
challenge to the
this is
UK
the, on
financial
average
stability
just
framework.
come down here, close all this gap shit down here. Now, how do we get there? It could be today, tomorrow, another day. There's no requirement we go down here. We're still holding support right now. This is where the used call lot is to go higher. I'm having some lag here. For some reason, I've had to like delete and make this chart like fucking 3 times today. Now I've got overlapping charts here. Do you see it? I've got overlapping charts now. I don't know why this is happening. I've got like Trading View is doing some fucky stuff. I had to draw this chart twice today. You can see the double fours here. But it's the same chart. Nothing's changed. We should go up here, but this gap down here is probable. This PT1, PT2 down here is very probable. We have to wait to see if we go down there. The door is open. I don't even know why this white line's here right now. This doesn't need to be here. I don't know what the fuck is going on. We just redraw this whole entire thing. What a pain in the ass. I don't know what's going on with Trading View. Let me just fucking change this fucking thing again. Sorry for swearing. The idea here, though, is that we still have... Oh, wait a minute. We opened the gate. This tag right here opened the ability to come up here and do another leg down here. So basically, that's what you're seeing. Let's go up here and look at... I'll draw this one more time here, guys. Yeah, this is open now. You can see it. Do you see it right now? It's right here. And what happened, I want to show you this right here. Do you see this? This is the best way to show it here. Do you see this right here? 80% of that candle's been taken. This tick right here was taken out. Do you see that tick right there? So just want you to see that this was taken out. And that was taken. There's a gap right here that needs taken out. And not only that, there's like, this is kind of where support is right here. Up, down, up, down. This is where they threw you down here. Whipped you up, whipped you up. Buyers here, here. This is where all these buyers are in here. All these buyers are down in here. That's your 682.
City CEO warns of more job cuts and calls time on old and bad habits.
But so you can see that this is where the buyers really are down here. And this tick was taken out here. This doesn't matter here. So I can draw it another way for you, but if you can see it right here. This is where the buyers are for this whole thing. So this is where Poop Island is right here. And we broke through this. So this kind of like opens us up to more down in here. It definitely opens us up. Now we don't need to necessarily go down there, but I just want you to know that the door has been opened. There's a gap right here that needs closed. There's a high probability of us going down there. And the onus is on bulls here. So we'll look at this really quick. Here's your weekly down here, 675. It opens the door to this as well. If we begin to lose, let me just draw this in down here. And let's look at this right here. See this right here? Do you see this candle right here? So this candle was wiped. That opens the door to all of these buyers down here. So some kind of move down here, sweep that whole entire thing. Bigger buyers here, down there's that's not open yet. Man, I'll tell you what, this is the target for me right now. 675.14 is my target. They did buy this. It's not necessary. It's not required we have to go down there, but we're gonna draw this in just so you can see it. But the door is open. Door is open to 675. And we'll bounce on 680, but the door is open down here. Make no mistake about it that the door is open down there. Even with this being bought. This turns into a yellow. And this turns into a red. This is pretty fucking bearish here. No Scotus decision. Again, no Scotus decision. I'm telling you, fuck you up here until you get some kind of a bullish move here. Let me just see this here. This was a daily over here. That was S3, by the way, too. I do have us trading, or did have us trading this morning down to here. But we went lower and unlocked, and then I had us going up to 678. Right there. This was this morning's look for this, but there's an issue. $684, 682, I think I got 685 and 680.20 right there. I'm gonna leave this on. I'm gonna leave this on dotted because it's still viable. If we do not trade above this line right here, we will reverse to the downside and slam it down there. You can see it right here, and then rock this thing. So what this would turn into would be, I know this looks kind of wonky, but it would turn into something like this. It would turn into come up here and then plunge down, and then you go up. Same thing, but you have this one more leg down, which is very viable right here. Let's keep watching it. Someone asked me inside the Discord, how do you know if you can buy the daily trigger here or not? You can't do it like this. You have, if you're gonna, someone asked me, how do you buy the daily trigger here? I will show you what that looks like here. Like, how do you know when to buy the daily trigger? Hold on here. So this is actually a good example. Where is the guy? Who was asking in Discord? I don't know if it was Dr. Doom, it was somebody. Oh, thanks, Joe. Who was that? It was Dr. Doom. Someone get Dr. Doom to watch the show. Okay, you're watching right now? Okay, so let's talk real quick about triggers because we have some questions about them, and it always frightens me when it's not a bad thing. It frightens me because this should be, you can do this on every trigger, okay? When you're buying dips or selling rips, either or, this works on the inverse and on the this works on buy the dip and sell the rip. So we got to talk about this because I'm frightened by that. If you just start buying triggers, it's gonna freak me out. I'll panic about that stuff. So the first thing you want to look at here, this is an hourly basis right here, right? We came down into the daily trigger in here, and you've got the hourly trigger right here. Now this is on this basis. We can do this on a 1 minute and 5 minute trigger. We can do it on a half hour or a half an hour, an hourly, or excuse me, an hourly and a daily trigger, and a daily trigger and a weekly trigger on any frame. Doesn't matter what it is. You can do it like a 4-hour frame and a daily frame, a 1 minute frame. It doesn't matter. Like a 10-second frame works too. Okay. But what I want to show you here is we have a price decline coming down. Right here. You have a decline in price, right? Well, first of all, we're underneath the hourly trigger right here. You can see it. And you have remember yesterday we came up and we rejected, remember at 4 p.m. I said, 3:30. If you look back on my comments yesterday on the show in the Discord, I said, we have a half an hour trigger crossing the hourly trigger. We should go up there and test it. If we reverse it, if we retest it, we should go down from there. And we had the cross right here, the half an hour trigger cross through the hourly trigger, right? So we've got some weakness heading into this morning, into the open. We have no decision by Scotus to slam us to the upside, right? And with no Scotus decision, what do? Blast down. We're underneath the half hour trigger and the hourly trigger, right? So we're going to go back down and we're going to trade the daily trigger. Now, do you just buy the daily trigger? Do you buy the daily trigger here? Do you buy the daily trigger here? Do you buy the daily trigger here? The answer is none of the above. You don't buy the daily trigger here, ever. You don't buy the weekly trigger. I don't even buy the 1 minute or the 5 minute or any of those. I have a set of rules. They're on the they're on the website that tells you how to buy a dip on any time frame. There are videos there that show. So there are some unlocked things. We unlocked this one right here. That's saying we're going to go lower, but I want you to. We're going to do this on a 1 hour basis right now. So the first thing you're looking for, if you think this, let's say you think this is bottom. Hey, Cap, I think this is bottom. Hey, Cap, I think that's bottom. Hey, Cap, I think this is bottom. I don't care where it is. I think this is bottom on a 1 hour basis.
Denmark's Poulsen says other NATO countries take part in Greenland drill.
Right there, and then
2026
this
Greenland
right
military
here.
drill to have permanent nature.
This one right here, and this one right here. And what you're looking for before you get long, if you want to do this in safety, is you want to see, I'm going to draw this in because I don't want to draw this other stupid shit ever again, but you'd wait for this candle
The
here.
French government survives the first no confidence motion filed by hard left party France Unbowed in the National Assembly.
And break higher than this right here. You can kind of see it right. See the hourly trigger right there? You just want to break higher than that hourly trigger. That's it. See that gap right there?
And Denmark's defense minister says we will have a more permanent presence on Greenland going forward.
Right? A back test on the hourly trigger, which is right here. Right? And then you want to see the second new high. When you see that second new high, do you see that line right there? That second line right there is telling you that the way is higher. Now, you might be thinking, but Cap, I lost all this down here, this move in here, and what about all this over here, Cappy? You can trade these on options. You could trade like just this zone in here. You could trade it to the 5 minute trigger just to make some money. You could trade the 5 minute and 1 minute to the hour and half hour. But there's a lower percentage win. There's no edge to win to be here. Does that make sense?
Bank of England's Ramsden says
like,
key
your
difference for policy this
percentage
year is we are not looking at a hump in
edge
CPI.
probability and statistics, right, of being correct and not wrong is lower down there. So you have less edge. You can trade the insides of these, but that's it. So you can like get in and get out, get in and get out, get in and get out. But you can't like buy that bottom and say, hey, we're going to go up here. And what can happen here is, so we can get this
Bank
out
of
here.
England's Ramsden says wages remain a key focus for me.
So like you can trade this 5-minute trigger and the 1-minute trigger. You can trade if the 5-minute turns up right here and the 1-minute turns up, say the 1-minute trigger turns up right here. On a double back test 1, 2, you can trade this one here, but that's it. Like that, you can only trade the insides of these triggers. You can't commit to this bigger upside move until you get
Ramsden
the
says
higher.
the latest ONS wage data is
The
encouraging.
second high right
and that labour
there.
market is continuing to weaken.
This is when you would be in safety to buy a dip and take this long. Now, oftentimes,
Voice news disconnected.
I don't know why that turned off. Oftentimes, you'll say, well, Cap, I missed this whole entire move. I'm so pissed off. Oh, my God. That's actually, when I hear that from traders, I get really sketched out because they typically never buy the bottom. They usually see it bounce, and then they have like this hindsight, and then they don't buy this right here either. They won't actually get bullish until we're up here. But the thing I want to show you on this is, do you see the bounce here, and then this 1, 2, and you're in relative safety here. You actually have like I think it's 73%. I don't remember anymore. 73% chance that it's going to continue the upside. And not only that, what happens after is usually big. Big uppies. So what happens here is this. I want to show it to you here. This is your first one right here. This is your 1, 2, 3, and 4 down. You're basically buying this to get a print up here. So do you see the difference here? You're sacrificing this right here. You can trade this on 0 dates and stuff, but you're sacrificing this to get that print right there. And this is your best trade is right here. The same thing applies down here too. Same thing in here. You want to buy the daily trigger, right?
Bank of England's
you didn't get the
Ramsden says my starting
confirmation,
point
so
is
you
that
get
neutral
shanked
rate
down
is in the
here.
middle of the
Oh my
2 to
God, I'm in
4%
pain,
range.
everything's terrible.
And Ramsden
When
says
back if
unemployment
you
and
just
redundancies
waited
are
for the
picking
first
up.
move up, and the second move down here with a back test, successful back test. In here, you could have taken that trade right there and just made clean money. Whereas this guy down here that's like long right here, he's down there. Now he's got theta burn. He might make a little money in here. But more than likely, this guy down here is going to be almost flat. Ain't going to make any money. He might have made 10% or something, but more than likely, no. They reprice options down here too. So they'll like murder your dip buy over here. Then they reprice all your shit, grind the chain, send it up higher, and you likely would not make any money in that trade. Likely, more than likely. On any short-dated stuff, like a week, 2 weeks, something like that, they would murder your options. Remember, it's not always just direction; it's options too. So where we are right now, right here, would I buy this dip? I wouldn't. In no way possible would I buy this fucking dip ever. Never, not right now. So what I would need to see is something like, I would need to see that move higher and to close that gap right there, that inflection point, the bounce on the hourly trigger, and then that second high right there. And then I'm Johnny on the spot, ready to get long. And this applies to every time frame. You can do the 1 and 5 minute like this on an intraday basis. If you have 1 minute's going up, right? 5 minutes going up, Just like this. 1 minute crosses down underneath. Like this. And we'll make price like this. So wait a minute. We'll go up, 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 right? Up. You get the downstroke, down candle right here, bleeding. Market attempts to go back up, gives you the opportunity to get out of your long. Starts to fail, right? Bam, bam, bam. Oh my God, we're in blood. It's horrible. Everything's terrible. The same thing applies down here. So you got a nice little low. You begin to see, I should draw this differently. Let's say it's 1, 2, and 3, 4, and 5, right? You would see this bottom, make the first high right here, back down. Second high right here, back down again, believe it or not. There's a bull plane on a 1 and 5 minute trigger. And then you're going to get long in the 1 and 5 minute right here. And then all of a sudden, bam, you're off and running. You take that out, right? And then bam, one more time. And this is the money trade right here. That's where the money is made in here. Right inside of this trade right here. This one right here, you may or may not get. This is the highest probable. It's like a 93% chance of winning the stank market. You can do this on any time frame with any trigger combination. So let's look right now at where we are on this chart. We are underneath the daily or hourly trigger. We still have not traded the daily trigger. We are underneath the 5 minute and 1 minute. So there's no confirmation of heading higher. It is there, even on a 1 and 5 minute. Let's look at this really quick. Let's look at this on a 1 and 5 minute basis. Is there anything on this 1 and 5 showing a double new high? It's like, let's start looking at this 1 and 5 minute trigger. You have your first high right here, right? You beat this one. Did we get the second one? For that one right there, even on a 1 and 5 minute basis? No, we didn't, did we? So if we got that one there, you would get the 5 minute coming up. You would get the 1 minute coming up here. And you could actually buy this right here. You could buy that right there. But where could you buy this to, because you're underneath the hourly trigger? You could only buy that from here to here. Right there, that's it. That's a good trade right there. But 0 dates, futures, whatever you want to trade. That's all you can and you get out in here. You actually get out right here. You leave this to the FOMO. And if you see that move up here and you see that next one up there, you can then jump back in, because you get your 1 minute comes up here, your 5 minute comes up here, and you're now on a cluster of hourly, half an hour is turning up, the hourly is turning up, and you're buying that right there. And this is the safe trade somewhere in here. It's a little wonky how I'm writing it, but and you can see right now, what are we doing? We're going lower. You see right now we're going lower right here. So don't touch this. Don't mess with this shit. When it comes time to buy the dip, I will show you when to buy said dip. But don't buy it right now. There's no buying dips here. There's nothing on this chart right here that says buy the dip on the daily trigger. Nothing. Zero here says buy the dip. So don't ever blindly buy bottoms. Now the same thing holds true for the inverse of this too, on sell side. The exact same thing holds true. You can just flip the chart upside down and do the exact same process. And there's some other key points here too that I have not gone over today. There are some other predictive things here. Is the hourly trigger flat or turning up? The answer is no, right? If anything, the half an hour trigger is going down. That's telling you the market is weak. The hourly trigger is in a downstroke. That's telling you the market is weak. The 5 minute trigger is vertical to the downside. That's telling you the market is weak. And the 1 minute trigger is in a downstroke. None of this is telling you buy a dip, is it? So normally when you see the market begin to turn up, what will you see? You will see the 5-minute turn higher, like flatten out and start turning higher. You will see the 1-minute trigger turn up, right? You'll see also what else will happen. The hourly trigger will begin to turn up with it, right? The half-an-hour trigger will turn up, and you're in an uptrend, right? So otherwise, you're just doing what? You're catching knives, right? So there's absolutely no reason to be buying a dip here right now, is there? None. There's nothing telling you it's time to buy a dip or at the daily trigger or the 5-minute trigger or the 1-minute trigger, weekly trigger, monthly trigger, doesn't matter. So you don't do anything right now.
10 minutes away from the top of the hour.
If anything, we're in a down move
Bostic
still at this
and
moment.
Fitz Kashkari speaking at two separate events. So Fitz Kashkari speaking in a virtual
here I've
town
got this
hall
going
with
down.
the Wisconsin Bankers Association. No indication whether text or Q&A is to be expected. Then Fitz Bostic is speaking or participating in a moderate discussion with David Rubinger, where no text is expected, but a Q&A is with moderator. Both videos are on the feed for you to watch. Remember, that's at the top of the hour.
There's that gap down there. That gap right there.
According to newspaper here, UK withdraws personnel from military bases in Qatar. So again, that's according to newspaper. Says the UK withdraws personnel from military bases in Qatar.
Open these up right here just so we can see them. Here's S4. Here's S5. That down there.
We have posted out the article on the feed for you to read through.
That right there. Blood, baby. Coming into 12 o'clock right now. Yeah, watch the I have a video. You don't have to pay for it. There's no like educational classes that I'm selling or anything like that. I just have a set of when I made those videos too, I wasn't that good at making those videos, but it still gets the point across. It shows you how to sell a rip, how to buy a dip, in more detail on how to do that. If you follow those rules, you should never lose. Like never. You have like a 90% chance if you follow those rules to win your trades. This is all verifiable. I got a white paper on it, and you can research it. I'll give you a
natural
white
gas
paper.
futures
I'll
extend
DM
losses.
you a white
Prices
paper
down
on this,
10% to 12-week low
and the
on
percentage
dropping gas
the
flows to
time that you
LNG
win.
export plants in Texas.
There's no need to rush buying a dip. Is my point. There's like zero reason for you to be looking for like I got to buy this dip here on this trigger. But we'll see. We'll see what happens here. Yeah, Joey Donut's making a good point here. I think Joe Donut makes I think Joe Donut always says, "Did they follow the rules?" And I go, "No, they didn't." Or I didn't. Sometimes I don't follow the fucking rules and I end up losing. But when you look back on history of the stock market with triggers, you'll be like, "Ah, fuck! I should have just followed the rules." You'll say it every time. You go, "Fuck it! I should have just followed the rules there." All your losses should correlate to not following the rules, like literally. If you don't follow the rules, you'll know it. You'll be like, "I didn't follow the rules there. I didn't just fucking wait and be patient." And you might lose a little bit of that trade. I want you to know when you, I can simplify this too. If you're going to buy a dip, right?
5 minutes ago, we were expected to hear from Fed's Kashkari and Fed's Bostic. Both videos are
if
in
you're
the feed
going to
for you to
like,
watch.
we have a decline here. There's usually 3 parts to a trade. If going up or down doesn't matter, but it's usually 1, 2, 3, 4, 5, right? Just in your mind, say that to yourself every time. It's 1, 2, 3, 4, 5. That's it. 1, 2, 3, 4, 5. Don't overcomplicate things. 1, 2, 3, 4, 5. It's simple, right? 1, 2, 3, 4, 5. What is the best part of that trade? Anybody? It's the middle right here. It's like a 93% chance of winning. Why is your chances lower here and here? Anyone? 1, because of more decline. And 2, because this could be a corrective upside move. This might be a 1, 2, 3, and then more down
Taiwanese
right here.
officials head to Washington to advance
Okay.
trade pact.
So this is
According
the
to people
juice
familiar
right here.
with the
This
matter
middle
describing Taiwanese officials'
portion.
visit.
So
The Trump
patience
administration
pays
is nearing
on the
trade and
bottom,
investment deal with Taiwan.
for this up move and this back test. And this is normally you'd see something more like this, and you need to get above that prior high on this one and hold anything higher than the prior low, and this move right here is usually a very high percentage winner. So and you can do this on every frame. You can do this in like a 1 minute. You can do it on a 5 minute, a 1 hour, a 4 hour. You can do it on a week. You can actually look on higher frames like a weekly basis and give an outlook. You can look at a monthly basis, and you can give an outlook for the next 3 to 6 months. You can see how bearish or bullish you are in the future. So you can look at this on any frame you want, and then give yourself an outlook. Say, all right, on a 6-month basis we're this, on a 3-month basis we're that, and a 1-month basis we're this, and on a weekly and on a daily and on a 4 hour, an hour, or whatever. You can give yourself an outlook for like how bearish or bullish we are on different time frames. That's a bigger conversation, but just hang out down here. Don't do shit. Don't do a goddamn thing. just be chill. You don't need to call the bottom. There's no reason to. There's no rhyme or reason to be calling bottoms here. We have new flows coming in at 12 p.m. That's another thing I want to talk to you about really quick. If you're just watching the show for the first time, you're going to get different flows at different times of day and at nighttime. And we have different markets. We've got New York cash market. We've got Asian markets. Then we've got London markets. Then we go back to U.S. markets, right? So 3 markets you're paying attention to. And each one of those markets has different times of days different times of their day in our day where different flows come in. And right now at 10 and 12, we typically get new flow in the U.S.
City
cash market
CEO in a message to employees.
We tend to get
says,
flows that
automation and AI may cut some roles. Again,
10 a.m.
City
and
CEO
12 p.m.
says in a
just so you
message
know.
to employees
10 and
that
12. These can
automation
be
and
bearish or
AI
bullish
may
flows.
cut some roles.
Normally, you lay off the market at 12, and you allow the market to show you the way higher or lower. And you can jump on that trade up or down just after 12. Don't get in the trade before 12. You just let the market show you what's going to happen here at 12 p.m. So we'll watch this. Let's watch this right now. This is a good
Surely
opportunity,
expected
good learning
to hear from
opportunity. So we'll watch
Fed's
to
and
see if we get
Kashkari.
buy
No
or sell
text
flows
is
right now.
expected for either of them. Well, it's not clear whether text is expected for Kashkari, but both videos are out on the feed for you to watch. seeing American Express, Capital One, and
I think they're
Synchrony
downside
falling to
flows. I'm going to
session
tell you
lows.
right now. I think they're self lows. I think we're going to squeeze and then go down. I think we'll go down to like VIX fuckery at 130. I think we're going to go up here and probably going to go right down in there. And it might take till like 12:30 or so. It could be up here. I think we got more downside coming over here. That's what I think. I could be wrong, but that's what I think. It's better to just sit here and watch. I know you try to tell him. I understand. I do the same thing. I'm gonna be honest with you guys.
Did see a headline
I'm guilty.
earlier on built unveils
Like I'll go out
cards
there and
capped
fucking,
at
I'll
10%
fucking
away
burn
from
cash.
Trump
Just like
demands.
fuck it, just in case
Again,
it turns.
American Express,
But
Capital
I'm
One
hyper
falling
aware of my
on the
own.
bits
I'm
or on the
responsible
built
for
new
my own
cards news.
fucking degeneracy. I don't blame anybody for that. That's me. We talked about that yesterday. We talked about being systematic with 25 to 30% of discretionary trading. But we are systematic traders here. I want you to be clear with you on that. I am a systematic trader, but sometimes I do the discretionary shit, and sometimes I win, sometimes I lose. Is there an edge? Maybe time in market. Maybe time in market will give you an edge, but you're still always better off on the systematic end of things. Oh, yeah, I should have said that, Hero, that wave 3 is typically the longest wave. Agreed. I should have said that. Wave 3 of 5 waves is usually the biggest wave. Though wave 5 can extend, like wave 5 is where you get like that. Wave 5 is usually, if it squeezes, it's usually where you're trapping in FOMOers. Everyone gets excited on wave 5 if it extends, but all it is like a honeypot to entice you to buy more calls. It's usually where you're most bullish, and it's usually like it's like dangling. Come on up here and get some calls. So. Yeah, I'm not seeing any risk off. I was saying that in the Discord earlier. I'm not Knight Rider. I'm not seeing any risk off in the market here. I've still got
So just a heads up,
going
the
green
video
today.
for Bostic hasn't
This
started.
is more stretching
but
in my view.
Kashkari's video has.
Hopefully, I'll be honest with you guys.
It's
I would
doing the
like to
introduction
see
for
if you're a bull out there. Let me show you a couple things here. So we got some problems here. Let me show you a few things here. So we do not have any hedging on the market. You can see it right here. I mean, it's bigger than that looks. It's a little bit bigger than that. It's down here. It's a little bit bigger than you can see. But this is like shrinking and growing depending upon where we are. Gamma can become more. So gamma is not puts. You know that, right? I'm hoping out there you know that gamma is not. Well, it's puts, but it's the importance of those puts, right? The easiest way to describe that. So there aren't a lot of puts in the market right now. You can see there's more call gamma than put gamma. This isn't good. You want to see more put buying that would make this more supportive. How do I describe? I'm fucking this up, but if you saw like stuff like this, you saw like all of this gamma here was big. So it was like huge gamma right there. And this call gamma.
Citi CEO says that We're
on here.
interested in collaborating with the administration on the affordability
If
of credit.
this call gamma was really small and this put gamma was really big down here, right? Huge gamma. This is supportive of the market to go higher. This harkens to, like, simplified. This harkens to 2 buckets. I mean, this is the simplest way to describe it, I think, to people. And if everyone owns puts over here, like tons of puts, I have to fill this huge ass bucket with money. Bunch of money down here. You know what I mean? I got to fill that. If I'm a dealer, I got to fill this. I don't want to pay any of these fuckers down here, right? I don't want to pay these guys. So if you start to see price head down here, the dealer's going to be like, oh, no, I'm going to start buying the market. I don't want to pay any of these fucks down here. And they all got puts now. And do I have to pay these guys over here?
The economy is
No.
confusing. The job
I only
market
gotta pay
is
these
showing
guys
signs
here.
of weakness.
So they're well
And inflation is still
hedged,
too
they're
high,
well
but
this,
moving in the
they're
right
well that.
direction.
So I will start buying the market here, right? And stay away from all this down here. The only time where this actually works, where it'll, like, in this case going down, is if you get real money selling along with these puts and rolling of puts lower. So if price slams into this because we're real money selling, and then people roll their puts lower over here, behind my screen, yeah, that can be a problem. But if we just don't have any put gamma or enough puts down there, and we head down here and there's no real true fear, people start buying puts, and the dealers go, oh, no, I'm going to start buying the market again. But this
French
is a
government
problem right
survives
here, right
second
now.
no
You see
confidence
that?
motion
That's a
filed by
fucking problem.
far-right National Rally, a party in the National Assembly.
Even if they buy puts, this
And
is
the
a problem.
video with Bostic has also begun as
What
well.
happens is you
Cash
get
Courage says
stuck in
overall the
here.
economy seems quite resilient.
And price will get stuck in here until either an event that can trigger buying calls, like let's say yes,
And
I
the
think
economy
yesterday
has
before
not slowed as
Monday
much
and
as
Tuesday we
expected.
traded up here. We had no event on Sunday, Monday that
There
would
is a
trigger
K-shaped
call
economy.
buying. So that would be close these and roll them higher, right? This goes away, and then you can get through that doorway. But what's the real problem right now is that we're going to get stuck in here. The problem for me right now is this is a wall now, and there's no reason to go through it, is there? So we're going to go down until we can either build this out, and we end up getting stuck in here, back and forth, until we either get an
Cash
event
Courage
that's
says,
negative
I wonder
or
how tight
positive.
monetary policy actually is.
And we're not getting either of those right now. So I would prefer, to be honest with you, to blast down a little bit. Create a little bit of fear, make people buy a bunch of puts in here. Another thing, too, is because of the time of year we're in, no one's rolling their calls higher. Everyone thinks, like I said it in the Discord, everybody thinks they're slick. Well, I'm just going to buy an in-the-money call. I'm not going to roll higher. Why? Well, because we're coming into seasonal weakness. That's a problem. As a trader mentality as a whole, like the whole psychology, they're pigeonholing them into a sideways move right now. And this is common in ER time too. It's common in ER when we come into ER season. You oftentimes see the market will, like, you have ER season. This is ER season. You'll see the market ramp up into ER season. This is where you should have gotten long.
And Bostic has begun speaking.
And then we start fucking fading right here. And we just kind of trade sideways. Yeah, there could be a range in here, but we're trading sideways in here for ERs. Oftentimes, too, you'll see individual tickers print and some die. And then you'll actually see a flush. And then we price in, you know, like all those call buyers for their ERs don't get prints, and then later on they print. Too many people on calls in here. So, and the added problem here is that we're coming into the weakest time of the year. The added problem in this is that we're also in like this coming into seasonal weakness. So all of these dynamics begin to fuck with the stock market and your upside expectations on, and what else happens here too is like there's another part to this where if I'm long the underlying in a stock, I'm going to hedge the market with cheap SPY puts, and that puts a damper on the market as well. So for SPY to moon, you need a reason for it to moon. So that we got some technical issues here with the market right now. Here's the market, so you can look at it right now, so you can see this. 12 o'clock, trading higher right now. I'm looking for some kind of roll here to the downside around 12:30. We have problems. We got not problems, but we just got usual seasonal crap problems.
Kashkari says, I have seen less tariff pass-through than expected.
I personally hope we go down a little bit, I'll be honest with you. I hope we can go down. I would like to see more puts. Just more puts in the market, more fear. We're not in fear right now either, just so you know. There's like zero fear right now in the market. I would like to create a little bit if possible. If possible. No doom, just a little bit of fear would be nice. Just freak everybody out, make them buy puts. I want the Discord, and I want the chat over here to be like, oh my God, we're going to crash and all that kind of
could
shit.
happen.
Like more of that is better. If you're a bull, that's what you want. We can go up if we do that. If we just create a little bit of fucking fear in people. I'd like more drop. Yeah, I would like more. I would like just a little plunge. I don't know if we can get it, but we might not. We could start turning up here. I would hate to do that though.
Fitzbostic says inflation is still quite far from where we need it to be.
Would be kind of nice. It helps the markets to go up. Right now, there's no fucking fear, and you can see it. Like you can see it in Gamma too. You can see it in call.
And the economy has been remarkably resilient. Kashkari says tariffs haven't been a gut punch many feared, but the long-term story is still playing out.
More than anything. Buy some in the money calls, bro. They're gonna print between now and March. That's what I'm betting. That's what everybody's thought is. Buy some in the money calls, some call spreads. They're gonna print by March. We parrot that here, right? It's gonna happen anyways. You got a couple open. That's what we say in the Discord. We're like, buy some call spreads in a low.
Postic says,
close your fucking laptop, and we're gonna get a print between now and March, right? That's what we say.
Posture is appropriate. We still need to be restrictive.
So they're gonna grind it out. I wish it wasn't. If it was like summertime, or like it was like the spring low or something, every motherfucker in their buddy is like loading out money shit.
We still need restrictive
rolling. The mentality, the sentiment, everything is like, up, market's going up. That's not the mentality right now, is it? The sentiment right now is not that. Sentiment is like, I'll get one more trade in for the
Bostic says we
big
could
roll,
put more
and
upward pressure
I'll take
on
a nice
prices.
easy
That is
trade, and
we have
it's
to
going to
watch.
print, and I'll hedge the highs, and eventually we're going to roll down in the springtime. That's pretty much the sanguine take right now in the market, in my view at least. So this is why we're here right now, as a whole.
Bostic adds that the inflation challenge has not
there really
been won
isn't
yet.
much to do here.
Kashkari says inflation remains target and remains committed to getting to that level.
Yeah, I don't believe that, Demi. I'm not with you on that, bro. I've heard that story. Every guy that does that I know is usually a loser trader. Anyone that I truly know in real life, they're not rich. I've heard that argument before. I don't believe that at all. You get rich once, or I mean, you get rich, but by the time you spend that money and trade some more, you're back to zero again. In my experience, and my friends, every person I've ever met, same thing. So, I tend not to agree with that, but I know that argument. I've heard that argument many times. I think you can do that with like play money. If you run a system, I think you can do that with play money, but I don't think as like the basis of your trading. I don't think it tends to work out. And the stats say the same thing.
Kashkari says, I'm most confident housing-related inflation is easing.
Still dragging right now. No reason to go higher. Moran this morning, he makes some sense. He's talking out of both sides of his mouth. Moran knows that he's got a very small window to cut rates.
Bostic says late market has weakened, but it's not clearly weak.
It even has that. So they got to get the rate cuts out of the way, pump the markets up as much as they possibly can. Now, when inflation does start rearing its ugly head, it's not bad for markets. The first part of the bottoming of inflation and going up, there's a window of markets going higher. There can be volatility in there if the Fed agrees that they see inflation rearing its head. There could be some volatility to the downside. That should be our spring low or summer low. If we have a summer low too, that could be assigned
According
to
to
that.
74 News, Paramount and Netflix met with European Commission yesterday.
But if the Fed says we're monitoring inflation and
As
the bond market
says,
believes it, the stock market believes it,
now,
and taking inflation
and
seriously,
it's unclear where it lands at the
the
year
market
end.
should continue higher.
I do not
into the end
expect
of the
inflation
year,
to surge
even
again.
if inflation is rising. So even on the inflation front, I think Moran just wants to juice the markets as much as possible before inflation rears its ugly head. GS this morning saying anything in financial services that directly interacts with the consumer has headline risk getting priced in. Giving President Trump's post on Truth Social overnight where he said everyone should support the Credit Card Competition Act. Overwhelming theme has money flows out of the sector. I would only put a little bit of, I would put the risk on headlines, but that's it. It's headline risk. It's not, I would not price that in as happening.
Bostic says softness in entry-level hiring is probably linked to AI.
I read...
US Treasury Secretary Besant, now speaking, says that I discussed critical minerals with Australia's Treasurer. This is just a post on X that he's put on here.
I read a white paper.
Other than mineral opportunities, spoke with other areas of mutual economic and national security interest. Kashkari says current Fed balance sheet expansion is not quantitative easing.
You guys can hear this, right? Okay. You guys hear this? You guys can hear the news squawker, right? I hope you can. I'm stopping speaking because of the news. I don't know if I'm only I'm hearing it or you guys are hearing it. I wasn't looking at the output. I read a paper this morning about will they make credit card rates 10%? They're not gonna. It ain't happening. There could be situations where it happens. There can be some give and take from the credit card industry, but it would take an act of Congress to make
Kashkari says my outlook for the economy is pretty good growth, and I don't see the need for Fed quantitative easing.
So this is all like when we come into like earnings. If you guys look back on every earnings season for financials, we sell them every year. We like ramp into them, then we sell them, and then they ramp-o-rama. 2 to 3 weeks later, they start ramping. We'll walk the plank on some tech stuff like
As
Netflix.
Bostic says, we're in a difficult environment to see what might be coming in the economy and inflation.
To set the tone a little bit more.
We should not expect there would be 100% consensus on everything.
But generally speaking, financials are weak just after their reports. Keep an eye on financials for the turn higher. The color from the president and the color from
Kashkari says that the biggest barrier to housing market is supply.
Voice news disconnected.
the color from like the color with the credit card thing and all that kind of stuff, like assigning that to financials, I wouldn't necessarily do that. It's normal for financials to sell on their ERs, and it's normal for financials to kick back in. You're gonna be like, oh, it's because we didn't get the 10% or whatever limit that's going up again. It happens every fucking year. It happens every fucking earnings season. So be careful with assigning the credit card thing to financials being down. And the last part on that would just be, I don't see the 10%. I don't see the support. The banks, the credit card companies are likely sitting in a back room right now, lining the pockets of your representatives and your senators, both Republicans and Democrats, and they're just looking for a quick payout to pay their holiday bills, or a nice stock tip. There may be some kind of we're going to pass the 10% thing, but it's only for this group of people. And I bet you that group of people was already going to get a 10% rate. I think the average right now is 22%, the national average for everybody together. So even if they pass that fucking law, it's going to be bullshit. It's already going to be someone that's got great credit that's eligible for 10% rates. If you're like out there and you do the buy here, pay here Mustang outside of an army base, then they're not helping you. They're not going to help you. If I had to guess where you're going to get what the bill is going to be, it's going to be some kind of consumer protection bill. But that's about it. I think it's going to be like some kind of like protection bill where you get to go complain to some fucking industry group or something. You ain't getting 10%. It ain't happening. It ain't passing the Senate nor the House. Yeah, tell them, don't it? Like it ain't happening, duder. It's not. It's the same thing as Greenland. Greenland's not happening, no matter what you think. Like, are we gonna take over Greenland? That ain't happening. It's not fucking happening. I can promise you that it's not happening. We might put troops there, but we're not gonna own Greenland. Well, maybe, but not now. Not in its current thing. It's never happening. It's just noise. Be careful what you guys read and consume out there, or think about what you're consuming and why they're telling you these things. I know. Oh yeah, let's go. Oh yeah, just shake it. Shank that fucking thing down here. Just get it down there. Shank it. Create some fear. If you notice too, I'm in puts. You don't see that? I'm in puts. You see it on the screen? She drives a Mustang. Your daughter drives a Mustang. Yeah, every soldier does. Every soldier drives a goddamn Mustang. Every they're like pariahs on the. It's not just them. It's really bad too. Like when I was in the military, it seems like you're making a lot of money, but you're not. Your money does not go as far as you think it does, but you join the military and right off base they got payday loans, they got fucking 30% interest, used shipbox Mustangs, and then people like put their shit in storage and then it loses value when you get deployed, and it's a fucking hot mess. Then like before you know it, you're divorced and you've got bad credit and exiting your military service. Pretty bad. Now that would be, I would get behind that. I think they did a law recently not recently, 4 or 5 years ago to rein that shit in, but it had no teeth. Like I think that kids, I think anyone up to 18 years old needs big laws against, it's kind of weird. Like, you're an adult at 18 years old, theoretically. Did you know, some of you might know this, some of you might not. if you get arrested, if you live at your parents' house or you're in college and you get arrested, you're not an adult from like basic shit. They're gonna call your parents, believe it or not, and have them pick you up until you're 21 or 23 or 4. Somewhere, it's a really weird time in a child's life between like 18 and like even 16. I guess in some states you can have sex or something if you're 16 with Romeo and Juliet laws if they're like closer to you in your age, and you'll have kids tell you I'm an adult, and you're like, hey, you kind of are and you kind of are not. If you commit a felony, you could be tried as an adult. If you commit like a misdemeanor or something and get picked up, you're more than likely they're going to call your parents, and if you live at home or college, I shit you not. They're not going to allow you to leave. So there's like this really weird gray area. And I think about that often with credit for young people, establishing credit when you're in high school or establishing credit in college or even the army to some extent. Like you're 18, now you're an adultish, joining the military, but you can't drink. You can vote, but you can't drink. You can kill people, sanctionedly kill people, but not drink, right? Until you're 21, unless you're in a foreign country that allows it, or in the middle of the ocean, you could drink too. But it's a time for predatory behavior towards kids, right? I feel like if you're a kid and you're 18 but not out of high school, you should still need parental approval for you getting credit if you live with your parents. I know you may be like, fuck you, no, what if my parents are bad at this or bad at that? But in truth, most kids shouldn't be doing that. In college, in the army, there should be some kind of law against predatory behavior, even if it's not the parents at that point. Kids fall into that frequently, that credit trap. And some of you might know people in your lives where when you're young, maybe your parents didn't guide you enough, or your parents couldn't, your parents had bad credit, or you were outside of your parents' preview and you were enticed into some really bad credit situations. It happens commonly happens to young people. So I always think, like, if Trump's saying that, add in something for the kids, so that they don't fall victim to that stuff, to bad credit. Yeah, you guys, I fell into it. I didn't have totally bad credit, but I was unstable making money in between like 18 and 25. I was in the army. I'm going to college. I'm like trying to work a job, trying to do the best job I can. And as a kid, it's like it's not easy, right? As a child, or as I look at that age as being a child. But I know you're an adult. I get it. You're 18 to 25. You're an adult. For me, looking at the 18 to 25-year-old, I look at them as still being children and undeveloped brains still, and a lot of older people that know that you don't have enough experience left in making those proper decisions. Some kids have that innate ability, but not most. Like a lot of kids get preyed upon until they're like 24, 25. I remember when I turned 25, I was like, whew, holy shit, was I dumb. And then like 30, I was like, I was still kind of dumb at 25. I didn't really feel comfortable as an adult until I was like 30 to 35. I started feeling like I got this. I can start doing I think 32 was a good year. Like my 30s, loved them. I was really good at life. I was getting better at life. If you're young and listening to this right now, you won't see this until you get older. It's hard to see until you're past those years, and then you're like, holy fuck, was I dumb as fuck. And you won't see that until you get older. So, but that is just age. Still grinding here, not going anywhere right now. I'll see if we can reject this 5-minute trigger right here and go down. We're just kind of parked here sideways. Oh God, please don't make us sit here all day long and then dump it at the close. Please don't make my eyes bleed all day today on a Wednesday. Please don't do this to me. Yeah, hindsight aging. Actually, hindsight aging is good. Hindsight aging is like, hindsight aging is when you look back and realize how fucking dumb you are, or I was, the dumb shit that you do. as a child, and there's no cure for it. I don't think there is, except for age. It'd be kind of cool if you could give like a VR experience to somebody, and just show them the common pitfalls of being young and growing older, and from the perspective of a young person. They make a good movie. I think I've seen movies like that, but I don't think there's ever been a really truly a good movie for that's able to pretend. There are some. The hero's journey can be like that. The old I don't want to call it our third. They're not really. They're more like Homer tales of old Greek tragedies and stuff. But if there's a way for them to frame it for you, if you could do like an AI movie where you input your life up until that point, so that you could have some association with that character. So you're like, oh yeah, I've got everything in common with this person in this film that's being made by AI, and all that same stuff happened to me. And then they like fast forward through that person's life, the most likely outcomes, for just like the 18 to like 30 or something. And then you would maybe that would help a child or a young person to see that stuff. It gets easier though. I will say this: if you're young, right, by the time you get to 30 years old, 35, you'll begin respecting that. You'll be like, oh my God, for the rest of my years on Earth, I know that things are going to change. There's an acceptance point of that when you become an adult. What do we got here? That's fucking a nightmare. Well, look at that shit. Yeah, exactly. Exactly, S'more. Exactly. Exactly. Your introductory rate of 10%, and then the it goes straight to 34%. That's a great way to spin it, because you could also do something where if you do miss one payment, like let's say you get the 10% rate, if you do miss a payment, instead of going to like 22 or 27%, it just gets fucking ramped to like 35 or 37 or 40. They just jack you in the back end. So if you miss payments, you're gonna pay for someone else that has better credit, even if they get that. That's a really good post. Whoever posted that on Twitter, they should have made it like 30 or 40% on the they should have made like cash advances 40% and the APR to go from 20 instead of 26 34, make it like 34 to 40%. So the plebs are getting fucked once again, right? The person that's like can't keep a job or gets fired and laid off or whatever. Yeah. So you got like the White House saying we got to help the little man out there, and then the little man's gonna get fucked anyways. So fucking bad, dudes. God, it's so terrible. It's so fucking terrible. Like every time the government tells you they're gonna help you, it's like no, you're not. I know you're not. I don't want to hear you're helping me. So bad. So fucking bad. I've never known the government to help me ever. I'm trying to think of where they've helped me. I've never seen that. What is the exotic fuck thing? I missed the exotic F thing. Yeah, come on down there. Come on down. Come on, Price is Right says come on down and close that fucking gap. Stoke some fear. The fear going. Make it plunge. No, don't do that. Don't grind. Don't grind. Don't grind. Don't grind. I want to sit here all day long. Please, God, don't make it grind. Please don't do it to me. So we've just every day this has been going on. This whole fucking week has been like this. Fucking Monday close was like this. Tuesday close. We're gonna do this shit again. God, just plunge it. Plunge it. One fucking day. I know we're gonna grind and then rip again. Notice how that 1 minute trigger is flattening right now? Do you guys see it? See how the 5 minute trigger is flattening? 1 minute trigger is flattening now. See it flattening right now? Our window for more down is going to be gone here soon. We'll start ripping the close again. Yeah, you guys see that? Oh, yeah, I love Momofuku. I loved going there with you. I haven't been to Momofuku in years. I've been to other restaurants that serve as shit, but never as good as David Chang's shit. What I like about Momofuku is that it's just there. Like, you can get in. You can walk in the front door, get some drinks, get some fucking buns. I know, but I'm saying, like, I don't live in New York. That's what I'm saying. You know, you can get in these days. Oh, there's nope, it's gone. There was a fucking place, doggone it, that sold Momofuku buns in Park City. They're not there anymore. They're gone. The fucking restaurant's closed. Used to be able to get Momofuku buns in Park City. Not probably one of the best I've had. Like copycats. Every other where I live here in Detroit, I haven't had a single fucking bun that's matched near. I went to one restaurant that copied them here in Detroit, and I told the server, I'm like, you got them wrong. You got them way wrong. I was like, one quick flight to New York, you could find out what you fucked up. They like missed the pickled vegetables and the sriracha and the hoisin stripe in it. Nothing. I agree. Well, what's that fucking you know what I tried seeking out was the like the double fried Korean barbecue here in Detroit. I looked for it. They got a little bit of it, but they don't have a dedicated Korean barbecue joint here. Like there's a little bit of Korean barbecue here, but it's not like New York. Yeah, the spicy chili crunch is good. I bought a knockoff of that recently too. They charge too much for it, in my view. I do have a bottle of it here though in the refrigerator. It gets all congealed. I have to like take it out and warm it up. The spicy chili crunch is great on like I got that and I've got a garlic one too. I'd say it's just pure garlic. I do black garlic too. Do that stuff too. We're gonna watch paint dry now. Yeah, I like the crunch. What else do I do? We should all, if we're waiting for this bullshit over here or over there, we're waiting for this bullshit over here. Tell me what your favorite condiments are in the chat. I'll try to think of what I do. I'll start for you out there. I am not gonna lie. I'm gonna tell you because I try not to do this. I do keep white truffle oil in the house. If I can't get real white truffles, I hate black truffles. I'll keep white truffle. I'll buy white truffles if I can. If they're in season, I will. But I do keep white truffle oil in the house, which I fucking hate doing. And how I use it is what I do is I'll buy a bunch of mushrooms and I fry them up, brown them up. I don't wash my mushrooms either. I'll tell you that. I don't wash mushrooms. I'll brush them sometimes. Water is bad for mushrooms, and then I'll brown them up and I'll make little baggies of them and throw them in the freezer. And I do add a little bit of white truffle oil to them. And I shouldn't do that, just a tiny bit as a finish. But and that gets me through my condiment. That's my condiments one of my condiments. So what's your favorite condiments that are unusual? I told you about black garlic. Smoked paprika. It's another one. If you've never had good smoked paprika, you'll never use paprika again. You just use smoked paprika. It's fucking bomb. I use MSG. I've got MSG in the house. That's a good one. In moderation. I'm not down with lots of MSG, but I do like a tiny bit sometimes. I love fresh dill. I have a huge garden of herbs. As a matter of fact, I keep herbs in the winter too. I love dill. Homemade pickles. That's a great condiment. I got a trick for you out there. If you like pickles, save your pickle juice from that you buy at the store, and then just throw when you eat all the pickles, throw new vegetables in there. You don't have to do shit. And you can just make new pickles and anything. Throw anything you want in there. Like not anything, but like you can throw carrots in there, celery. You can throw pickles or cucumbers. You name it. Throw whatever the fuck you want in there. Onions. I do keep red wine vinegar. I keep pickled onions, and I keep pickled peppers in my house for like what's the Sopranos sandwich? So if I get like hard meats and stuff, I just throw that shit on there with some olive oil. Sour cream and chives. Ooh, homemade sauerkraut. Any of you guys make kimchi yourselves? Anybody make kimchi here? I don't. I've made it a few times, but I don't make it anymore. Too much of a pain in the ass for me. Yeah, gabagool. That's what gabagool, right? Oh God, that looks good. I haven't had a baked potato loaded in fucking a long time. That looks delicious. Looks super delicious. That looks really good. Any advice for Meta? Yeah, sure. I'll take a look. I got advice for Meta. Advice for Meta. I've got them on my end coming down to. We had them coming down to the 580 on the monthly and weekly bar, but I haven't done anything since then. We give outlooks on it for. We give outlooks for it on. What do you call it? Elliott Wave, but communication services have been a sell now for a bit, haven't they? I thought communication services have been a sell for a while. And they are a communications company. I think I posted that in the Discord this week or last week. I gave a midweek color from GS like a week or two ago on a Monday, and it said communication services were still a sell. You want to know what I think about it? I think it's still a sell. Maybe we can. Yeah, I see a more down for Meta. Not more up. Their daily trigger is getting pretty weak right now, too. On a 30-minute basis, their daily velocity is still negative. On a daily basis, I know there was some degrossing from communication services. Weekly velocity looks terrible. Daily velocity looks terrible on it. On a daily basis, daily velocity, weekly velocity does not look good. You know what I'm interested in right now is they are closing a gap right now, but there's one more gap to close at 592, and then they have another gap lower at 507.94. Even if you get like a meta, here we'll look at it together. I mean, you're gonna get probably the rip on their ER, but I wouldn't touch meta until it goes lower. You could close this right here and get your here's the potential for your ER, and then this right here, something like this. So close the gap right here. You're definitely going to be closing this before you get to ER. Here's your ER right here, so close the gap. And you are at the behest of a downstroke here. Here's their ER right here. See it? So you got their ER. You've got this. Maybe you get a little bit more here, but then it's still down. You can see where these sellers are. They're right in there. They're selling here. They're going to sell this. And they'll sell this right here. I wouldn't touch them until... here. I think you could even stall in here. This is meta. You could redraw this like this. Something like this right here. Close that gap right there. Hold on here, one more thing. It's something like this. This is the initiation of the trade right here. So this is where the trade started. Right here. You come down here, maybe you catch a little bit more distribution, more pain. And then right here is where, I mean, they bought it here. So you're going to argue that this is the next buy, but I disagree. I think it's right here. The smart money's right here. You can see them like here. They bought that, they bought that, they bought that, and I would assume that it's somewhere in here. Someone here start buying it again. Here, 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 here. You could potentially buy this in here. There is another argument here where there could be another argument here where you come in here, you buy this, right? They jack this up right here. I think we talked about this with another stock yesterday. I don't remember which one it was, but you know, if you come down into, let's say we come down here for April. So this is your April 15th tax deadline right here. There can be an argument made that we go up here, come down for your April 15th tax deadline, and then we start grinding. So your daily trigger comes up. So I want to explain this to you here. So do you care if we're here or here for tax deadline? I don't think so. I think you just know that it's going to come down. It's either going to hit here or it's going to hit here for tax deadline. So what, you buy the dip here. You buy the dip there, no matter where it is. And then you what? So you fail this high here. Comes back down. You fail that high there. Comes back down. You come like mid-June. That's your summer ramp, by the way. So your summer ramp comes into play here. We go up here, right? Make a new high. Right? Up here, make a new high. Right? And then what happens here? You got this big line right here. So you're above it. Right? So you're down here now for, you know, October, November, and then there's your ramp. Same shit here. There's your ramp. So I don't think it really matters. I think it matters. You could probably get long in here. One more pump. And you don't really care where this goes. You're still going to get out before it. Like, see that wick right there? You're still going to exit the trade right here no matter what. The rest of this is like a whole separate trade, better with options than owning it. And you know, it's still going to be better with options. Now you can buy this, and you can buy this and this with the underlying, but with options, you're just going to be doing like straight calls or something for that extra little bit up there. So this is like the worst case scenario that I see. Not only that, there is a little bit of like, see right there? Smart money's right here. Smart money's right here. Smart money is somewhere in here. Maybe there's a wick in here. See the nice big candle. Nice big green candle. Then there's a wick right here. You know, something like that. There's Meta if you want to see it. You guys want to maybe print this for you? I can print this whole year out for you if you want. This would go up here. Hold on here. Let's go up here. This is October, September, somewhere in there. Something like that. Kind of see that going right there. Something like that. The only question I have here is this one right here. This is your December volatility. Right to that trigger there, and then a new all-time high. And there's your 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. There you go. I got you covered. Hold on. Something like that. Now, if you look at that, if you look at this part right here, so let's say we do it the other way. We do it this way. We like pop up. You would have that same like bottom right here is right here, right? You'd have this one more drag down here. So you should pop up right here, dragging, and then it's the same shit. It's the same fucking shit in here. A bigger question is like, this is end of year. This is the one where, this is my big question here is, so this is end of the year. My big question for 2027 is there like a super fucking ramp to the top up here? Like, is there like a straight vertical? And this goes into March. This is Q1 of 27. That's my big question is there like this big like violence to the upside of 2026, start of 2027? And this would mirror a lot of 1998 to 9. This move right here. You know, this is I know you might be thinking there's no fucking way that happens, but we saw 36% to 50% moves in the 90s. This is 36%. This wouldn't shock me. That wouldn't shock me. This, and you can see it. There's $1,000 right there. This wouldn't shock me. Now, if you're looking at meta like this, if SPX would go more like this, more like that, and you'd have like this, like SPX should be like a little bit flatter. Tech should be a little bit more violent, and but out of nowhere, you would see tech just like fucking go vertical up into the end of the year. Whereas like SPX is a little bit more calmer, a little bit less volatility. It's spread around the markets, and then it would just fucking ramp. This one right here should be a big move here. Like you guys see that? God damn, look at that. And if you look at this on a daily basis too, like this, so you can see it like this. So you can see it like this right here. So watch this with me here, right? So your weekly comes down and cools off. You see how like your weekly velocity cools off? And you'll say you're cooling your weekly velocity off, and then all of a sudden that fucker starts turning. You might want to, I would monitor Meta's weekly velocity on a daily basis. You start putting together weeks of a turn up on your weekly, it's going to be fucking... Let's see what happened the last time that happened. You want to see what happened? See that right there? I don't think it'll be as severe as 2022. This is a good example of what it'll look like. It should look something like this. And then the end of the year should be like, whoom, straight up. You see that violence and move? I don't think it's going to be a bear market this year. I think it's going to be just flat. It's like 2022, but not quite like 2022. It is, but it isn't. And this should be like now into March, and then a roll down, and then this big fucking move up in the end of the year. That's what it should be. Something like that. I'm betting that this is going to be fairly close to what this year looks like on Meta. Like roughly, it won't be exact, but we got to cool off the, we got to cool shit off right now. It's not necessarily bearish. It's just cooling off momentum for this much, much bigger move up and into the year. And it went vertical the last time, too. I got an example for that happening again. So let's watch. Look at what we're doing right here. I'm going to slide this over again. Same thing. Just going to keep sliding it over, sliding it over. I'm going to move this down a little bit. Just grinding, grinding, grinding. We're not going anywhere. Slide this over. Bears don't have a ton of time left. They got to get a move on here because this will start flattening out at some point. You only got so much time, Bears. Yeah, Moran was quoted as saying inflation is coming down. The other stuff is just noise. He's wrong. Inflation is rearing its ugly head. We're at the bottom of inflation right now. You're not going to see it for 3 to 6 months, but he's wrong. He's very wrong. He knows it. That's why he's demanding cuts right now. The tell is right there that he wants cuts like as quickly as possible because he knows that inflation is rearing its ugly head already. Does IWM outperform the SPY? IWM should only outperform the SPY when we get tariffs struck down. Tariffs would need to be struck down for IWM. They should be the same at the end of the year. There should be no difference in any of these indexes by end of year. I think I said this a few weeks ago. If you were an old school Tesla trader, it'll be like that. Like an old school Tesla. Remember that Labor Day at like 3 a.m. where Elon came into Wall Street Bets and he said something about oranges or lemons or whatever, and everybody's what do you call it? They're getting annihilated. Their leaps. Anybody remember that? We had a big move in Tesla, and then we just started fucking grinding, and all the leaps looked like the leaps were like worthless, and then all of a sudden, Tesla just started fucking climbing, and that was it. This year should be marked by that. I wouldn't call it 2022 exactly. I don't think you see big lows like in 2022 or the destruction per se. I don't think you see that underneath the surface. I think it's more like rip it up, trade sideways, and then a fucking super ramp. If we start giving up Q4 of the indexes, not the stocks, but the indexes, we should have some concern, but Q4 of 2025, we want to pay very close attention to that. I think that's like 600, 615. That opens doors to destruction in the stock market, but that's a viable path. But we're not there yet, so there's no point in like stroking yourselves on macro is not the thing to do. You leave that shit to the fucking subsellers and the article writers and the news sellers and the plying your emotion sellers. I don't know how you call that, but the doom and gloomers. I'd be more afraid of when the bubble pops. You want to be afraid of something, be afraid of the bubble popping. Whenever that fucking bubble pops, it's going to be a fucking mess. Be careful and be careful about what you consume with people saying the bubble has popped. I've heard that now a lot. I heard that shit in the fall. I heard it in the summer. Like I keep hearing like the bubble has popped. Whenever you just automatically block those people. If you know them on socials, just block them. Bubbles pop. Don't bother. The bubble will pop when the daily trigger crosses through the weekly trigger. That's when you're going to get the pop. Or a partial pop or a deflation of the bubble. We briefly saw that, I think, in the fall. We got wobbly in the fall, but it quickly resolved itself. You'll know that the daily trigger will cross that weekly trigger. You'll hit your first low and then you get your second low. You want to get the fuck out of the market until we go risk on again. We're not there yet. Just grinding now, more grinding. There's a giant gap to close here, though. Big old gap to close up here. Have we hit 99% yet, or 1% on SPY? Anybody know if we hit that 1% yet? We're pretty close. SPY is at 0.96, 0.97. 1% we tend to get a squeeze. Tend to. TGT is up. I should have said ASST to you guys, and I didn't this morning. I should have said something. I was going to say something, but I didn't. ASST's been green all day long. KRMNECGON's been good all day long. UMAC, take a look at UMAC. KRM, CGON's been good all day long. ASST's been good all day long. I should have fucking said somebody ASST, and I didn't. Apologize. What else is up today? BMW is up today. Cost is recovering. I got an alert earlier for cost. COST is looking good right now. Dominion already ran this morning. I should have said something about some of these stocks earlier, and I didn't. Gold is coming back right now, too. Watch out for gold is starting to move up a little bit. Could see SPOOs start ramping here shortly. Silver's up now, right now, too. TGT is back again. IWM is now flat. Watch out for a squeeze here. $1:30 in the afternoon right now. If you're a bear, you better get it done. We're entering squeeze risk time. I still am. I'm about to close them right now. I'm down $20 on them right now. I might leave them on. We're going to start squeezing. I should close them, though. I'm not going to. Watch out. We're in squeeze territory. Target 690. 690.60 or 690 flat. Target is right here. That's your target. The yellow box up there. Bears unable to do it here. Have a bull flag or a bull plane forming. Not quite there just yet. You want to wait for it to happen before you go long. It's right here. You have a prior high right here. So you just want to see this move up. And you want to see this one right here and then start getting long in there. Not quite there yet. Almost there. Be a little patient here. I'll leave this up for you here. Should I take a break so we can squeeze? I don't want the squeeze. I want the down. I got to stay in the... I'm not closing the put because I need to protect my longs, even if we squeeze. I should close them, but I'm not going to. They're there for tomorrow, so I'll just hold on to them. If we go up, then I won't have to worry about my puts. If we're going to go green, it ain't going to matter what I lose. I'll eat the puts. Right there. Daily trigger starting to move higher, or excuse me, 1 minute trigger. Moving higher. No, I want more down too. I do. I'm with you on that, McHaggis. I just want to get the fear going here. If we don't hedge more, we're gonna go through this again. We won't. We're not done doing this bullshit. Just check the 1 hour real quick. To begin to pull ourselves out here, we need to trade 6918.77. Let me just mark this just for a brief moment here. We need to get above 1130. We need to get above. This is look pretty good. So let me just show you guys really quick. So if you want to see something productive here, do you see this high right here? You see this one right here? If we can squeeze up here, if we can squeeze up there and get just above there right there, that's very productive. We could come back down here, and if we hit this one right here, we can exit. It's looking very productive. We'll keep this one here too. I want to see if we can get up there.
Surely
if-
expecting the Fed reverse
if we can
repo
get there.
operation.
It's extremely productive. I'll show it to you in a better way to describe it to you. So if you're looking for like the market getting productive, I just want you to pay attention to this zone right here, this gap, and then this one right here. So if we can get above there and we can get above there, that would be extremely productive. Just this move right here would be like wanting to get putting some longs on there. We're not there yet, but I've got them marked out here to watch. Same thing, just move this over.
$15 counterparties take free spot 223 billion at the Fed reverse repo operation.
I'm watching this closely here to see if see this high right here. You want to be watching this one right here. Still haven't done it yet. Let's watch this closely together. You want to get anal about it. Still haven't closed. See that? See this right here? Let me show you guys something. You see this tick right here? It's what the like the robots, the algorithms. See that right there? This one, that high right there at 1248. See this high right here? See that high right there? How it's not hasn't touched it? You see it right there? 1248. See how that's a low right? It's not high enough. So if I'm going to close puts, what I'd want to see would be that high get taken out. And then one more high right here. And I think it's right there. The back test, I would exit puts right here. Then we'd start ramping. But we're not there yet, so. This is the you shall not pass line, this red line right here. Or you need to pass that red. You need to get above by a penny, above 68745. A penny above 68745. We're just not there yet. Watch it closely. You don't need this here, do you? You just know it's there. Pop the cherry, baby. Still haven't done it yet. Remember, you need the pop of the cherry and then the second high. The cherry's right here. Look, you gotta pop the cherry. It's right there. You just need to pop this right here, and then pop that right there, and then that 1 minute trigger will be right there. And it might liquidation break you, but it'll come right back, and then we'll go up.
Beijing tells Chinese firms to stop using software from
I'm gonna draw it in for
CrowdStrike,
you.
Mandiant, Wiz, Centerlone, Recorded Future, McAfee,
Looks like
Clarote,
this.
and Rapid7.
It's like that, and then it looks like that. All you need is the tick. That's it. Just the tick. Literally, it's literally a penny. That's all you need. Still haven't done it yet. Ugh. Bull plane forming right now. This will be the back test to buy right here. You still need to pop the cherry and get a new high. Still no new high. Almost. Buy flows coming in. Almost there. Almost starting to squeeze. Not yet, though. Almost. You just need to see 687.46. 687.32 right now. 687.38. 637.40. 42. Come on. 6 more pennies. 3 more. 1 more penny. There's your first high. Just waiting for a second high right now. There's your first one right there. There's 1. You're going to wait for 2. We'll start squeezing here. Start looking for this target up here. Remember the second high, you need 1 and then 2. 2 highs, not just 1. Give me like a few minutes. I'm gonna go potty really quick. I'll be right back with you guys. I gotta go potty. Be right back with you guys. I gots to go pee. I gotta go to the bathroom. I literally gotta go bathroom. We're going up. We're going up. I got your targets right here. You just need 1 more high right here. Nice clean back test of the 1 minute trigger, and we're off and running to the upside. I gotta go potty. I like literally at this moment I gotta go pee. Just waiting for a nice clean back test of this 1 minute trigger to start moving to the upside. Oh, wait a minute, I gotta put this in so it looks fine. Right there you go. Targets are up here. First target is first target is 688.83. Here's your target 1 right here. 688.44. Sorry, 688.84. Second target 689.41. Third target 690.32. Remember this green bar right here for a back test flush, and then up and running we're going. Like I gotta go potty. Just give me like fucking 2 seconds. No, we're not risk off. Focusing the risk off. I'm still in puts. Pause. My puts are on the screen. Looking for
Bild newspaper says Germany will send soldiers to Greenland this week. The G7 remains prepared to impose additional restrictive measures if Iran continues to crack down on protests in a statement. So, a reminder, in 10 minutes' time, we're expecting Trump to participate in a signing ceremony. We do have a live stream by his name in the economic calendar, and we will post it on the feed in due time. Denmark's Foreign Minister Rasmussen, speaking now, says we came to the US following a number of remarkable comments about Greenland. And Denmark's Foreign Minister says we are definitely ready to do more. Denmark's Foreign Minister says Greenland is covered by Article 5 and we are eager to work with the US. So a reminder, in 5 minutes' time, Trump is due to participate in a signing ceremony. We have put the live stream on the feed for those interested. Germany to send over a dozen reconnaissance troops to Greenland on Thursday, a government spokesperson has said. Denmark's foreign minister says our perspectives continue to differ. We had a frank, constructive discussion with the US officials. Denmark believes long-term security of Greenland is inside the current framework.
Oh boy, looks like we're squeezing here. Let's see. Let's see what we got going on here. I gotta move this fucking camera. Oh boy, what's that?
Denmark's foreign minister says ideas that do not respect territorial integrity of Greenland are totally unacceptable.
Hold on. Okay, so we got 1, 2, 3, 4, and 5. Whoa. Right in there. Okay. So we got going on there. Let's see what happens. Now you could look at this another way too. There's smaller waves within waves. There's a wave right here too. It's 1 right there, 2, 3, 4, 5. You see the waves within waves? There's waves
Denmark's
within
foreign
waves,
minister
man.
said that they are to form a high-level working group with the US on Greenland.
If you're out there watching, this is the juice right here. You got the juice.
So around at 2 p.m. Eastern Time, expecting the Fed beige book.
Oh, yeah, Fed beige book. Get the fuck out of the way for that. You know it's going to say party time, right? We'll move this over here. Whoop. All right. That over there. Whoop. Right over there.
And Denmark's foreign minister says, in the US Greenlandic talks, we agree to disagree. One minute remaining for the Fed beige book.
Oh!
Ten seconds.
Beige book coming up next here. Watch out here. Could have a little bit of pullback going on. Beige book, how's everything going out there? Should be improving, right? We got a government's open. Story bears won't tell you.
Fed beige book says overall economic activity increased at a slight to modest pace in 8 of the 12 Federal Reserve districts, with 3 districts reporting no change and 1 reporting a modest decline.
We're making
the
money.
Fed beige book says outlook for future activity, while mildly optimistic, with most expecting slight to modest growth in the coming months.
Out there. Woo!
This report was prepared at the Federal Reserve Bank of Richmond based on information collected on or before January 5th, 2026. The Fed beige book said prices grew at a moderate rate across a large majority of districts, with only 2 districts reporting slight price growth.
Oh, what's that? Another green box right there.
Denmark's foreign minister says it's not necessary for the US to acquire Greenland.
Oh boy. I'm getting I'm down a little bit right now. My protective put's getting annihilated right
According
now.
to Semaphore, US to get first $500 million Venezuelan oil deal.
Whole bunch of green boxes in there. Come on up. If you look at this closely here, we got the start of a new 4-hour candle on SPX and SPY. So what we're going to do is I want to show you guys something here, okay? If you want to know if we should go up or whatever, let's take a look at this real quick. Okay, we got a 4-hour candle
I
right
posted
now.
a link to the Fed page
I'm
book
gonna
on
mute
the
all
feed for those
this.
interested.
So do you see this 4-hour candle right here? So watch this closely, okay? You got this candle right here. And you got this candle right here, okay? You see that candle? You see this one right here, this candle? So the bears are still in control right now. If you watch closely, there's a mark right here and a mark right here, okay? The bears, we can go
Semaphore
up here
cites an
and still
administrative
go
official
down.
on the Venezuela oil sale.
Okay, we can even go up here and still go down. Now, if we go up here, that's good. But what is that telling you? It's telling you the market can go up still, right? So the market can go up to right about where? Right here. So in this 4-hour candle, we can start the candle down here.
So a reminder at 10
and
past
still have
2
a bigger
p.m. Eastern
4-hour
Time,
low,
expecting
right? It could
comments
be
from
like
Fed's
this,
William,
right?
whose opening remarks at the
So
New
think
York
about
Fed
this candle
annual
like this.
An Economy That Works for All event. There will be a live
So
stream.
even if we're
Text
going to go
and Q&A
down,
is not expected.
even if we're going to go down, this candle started right here. So we can theoretically go up a little bit, can't we? Even if we roll down. We don't care about if it's going higher or not. We don't care if we're taking out this candle right here, this candle. We don't care about that right now. We just know that inside of this 4-hour candle, that just began, that we can go up to here. Like the market can go up a little bit before it rolls down and makes the candle deeper. Does it make any sense? So let's mark this out really quick. Let me do this on a different chart here. So let's look at it like this. I'll show it to you in a different way here. So we've got let me go to something like this. Blank. Let's do it like this. Fairly easy right here, right? Got a 4-hour candle right here. Right? This 4-hour candle. We're going to go inside of this candle, though. We're going to go like this. We're just going to draw lines. We're going to draw a line right there. We're going to draw a line right here. We're going to draw a line right here. Fairly simple, right? See it right there? See it? Is it better now? See it right there? And then what we're going to do is we're going to snap to a 1-hour basis. Okay? And we can see some information in here, can't we? We can see that on an hourly basis, we started a new 4-hour candle, right? We're going to put one right there. We're going to put one right here. We're going to put one right here.
Reminder in
just
5
looking
minutes'
at
time, we're
this.
expecting comments from Fed's Williams, who's delivering opening remarks at the Fed's annual An Economy That Works for All event. Text and
We
Q&A
want
is
to
not
get
expected, but a
information
live
here.
stream will
Here's
be
a
present.
1-hour basis. We got a low, a higher low on an hour. That's good. We just beat this
So
candle
reminder,
right
for
here.
this live
See
stream,
that?
you do have
We
to
just ramped
register.
up
We do
here.
have the link
We just
posted
knocked
in the
that
economic
candle out.
calendar
So you want to
next
come
to
back
the
down and
next
just
to Fed's Williams'
retest
name.
this, and then we have maybe a little bit more. Does that make sense? Now, if we lose this with a new low, we'll go down and make that new candle. Make sense? Does this make sense at all? I'm going to show it to you in a 1 minute how it looks. Ready? So we're back testing this right now.
Denmark's
You
foreign
see?
minister says there is
We're
not an
back
instant
testing
threat
this
from China
power
and Russia
right here.
that we can't accommodate.
If this holds, we should go up, shouldn't we? Make sense? If we begin to lose this, we'll go down. So we're watching the back test right now of what? We're back testing the hourly candle. So if we go back down to this bottom right-hand side, we're not using anything else right now. So let's look at this real quick. So watch, we are back testing this hour right here, this candle. We're just using candlesticks right now. Do you see that? See that we're back testing? If you're watching this on a 1 minute basis, we're back testing the 1 minute candle right now. And we can go to where? If we successfully back test this on a 1 minute basis, where can we go? Right there, right? That's 6912. 6912, right? We can fade this early or whatever, but it's fairly easy, right? So on this one right here, where's 6192? Anyone? Right here. Up here, right? We can fill that underneath. We can fail it under here. We can go well up 6192 on SPX. But that's about where the expectation is, right? So let's keep this. Let's keep this bottom thing right here. This bottom one right here. We'll put it on a 1 minute basis. You see it now? See the white lines right there? And watch what we're doing right here. We back tested this. Right? Back tested that. We came up here. We back tested it again right there. Pounding, pounding, pounding. Why are we pounding that? So that we can go higher, right? Let's watch this closely here. Let's watch this real quick. Keep this in your mind right here. Just watch this
Denmark's
white
Foreign
line right
Minister
here.
says
That's all
we
you
didn't
need to
manage
see.
to change the American position on
If
Greenland.
this holds, we should go higher, right? Higher. I say yes, Cap. If we were to make a new low over here, let's go down here and look at this really quick. Do you see this wick? I don't know if you can see it, but there's a wick right here. Do you see that wick? That's a green candle. So if we were to roll, what would this look like? You would want to see the break of that 69031 and then another low underneath it, right? That's what you'd want to see. So what's SPY doing right now? It's kind of stalled, right? It's just like parked here. Make sense? And we're just going to watch this. We got the buyer right here. Here's your buyer. Your buyer stepped again right here. And you just want to make sure this guy is still here. This guy should step in right about here, right where we are. Right there, he should step in. Just like you got this mark right here, this mark right here. You're just going to watch this to see if we can go higher from here. Let's watch this closely here. You want to make sure these buyers are still here, right? You got the buyers that started down here. Rampo-Rama. You got the buyers that stepped in right here. And you want to make sure these buyers are still here. And we're staying within this hourly candle so that we can trade this right here. Right? Make sense? Hopefully it does. And you can see that right there, right about there. It's probably your 4 and your 5 right there. We'll just keep this one up so you can watch it with just candlesticks. Nothing else, just candlesticks. Remember that we're only halfway through. 1 wave, 2 waves, 3 waves. What else do you want to see here? What don't you want to give up? This right here, right? You don't want to give any of this up, do you? You don't give any of that up. Notice that we haven't given that up yet. So we're up here in a triangle right here. It should go like this, just like that. You can actually use this prior high right here. You can actually now use this prior high right here as the instigation for the second leg and the third wave of the bigger 5-wave structure. If you see this new high right here, you would buy whatever that dip is, and that would send you up here. Make sense? I don't know if it does or doesn't, but watch this closely here. These are where your buyers are, this green box right here. I'll make it even bigger so you can see it, or where we think buyers are. We'll know if buyers are not here. Or if there's more sellers than buyers. I know that's a horrible thing to say, but more sellers than buyers. Good chance of an Iran strike tonight. Maybe that's where we'll get our next low for tomorrow, for the morning before TSM. I'll leave that up for you there. Oh, there they go. There they go. I'll draw this out. Not draw, I'll just show you the white line above it. It's right here. So these guys should take this up higher, and these guys should take this right about there. I'll move that over so you can see it. Need to get a high right now. Must get a high. Need that red candle on the bottom down there to turn into a green candle. You can do it. You can do it, Spoos. Murder all those puts down there. Murder all those puts. Got a nice little, that's a nice tick right there. That's a good tick. See that tick? It's a good tick right there. Just want to buy this now. Now I want to buy this one right here, right there. Want to buy that one. See that white line right there? We broke that one. Now I need to see one more. Nice little dip buy right here. And then whammo right here. If it fails, I'll tell you. Is that supposed to be bad, bombing Iran tonight? I think that's going to be good. Sucks when a populist is in power because you're like, God damn it, I hate this guy for all this other shit, and then I like this guy for all this other stuff, right? It's like an awkward penguin a lot of times. That's why when you ask a MAGA something one day and then you ask them something the second day, it's a different answer, isn't it? No offense if you're MAGA out there, but you can't really take notes on MAGA, can you? I don't think that the Iran stuff is necessarily like bearish. Like bearish, like material to our markets. I don't see it as that at all. And neither is public perception of it either. If you want like material bad shit right now, material bad shit would be like Scotus not only upholds tariffs, but says the president has sweeping authority to do whatever he wants. That would be bad. The market would want to price that uncertainty in. Would also be something materially bad right now. What's material? Like right now, material bad for markets. SCOTUS is all I can really think of. I've heard things about the dollar. I don't agree with the dollar being negative. For markets, I'm not in that camp at all. What could be bad for materially bad for markets? If we actually did get the 10% credit card thing, that would the street would have a fucking meltdown. I don't think it would be materially in the long run bad for markets, but I think that the street loves to put up hissy fits. So, like, if they change that, I don't think they're gonna. But if it really was changed, I think that would be material. It would materially restructure how they make their money. And someone's going to get fucked one way or another. I'll just tell you right now. So there'd be that materialness just for that, pricing that in until they figure out. They probably already have figured out how they would fuck you. But I assure you they will fuck you. They just will. There's just no choice. I don't know who they're going to fuck. They could be fucking the bottom barrel. I would assume that's who gets fucked. But someone's going to get fucked in the mess. So. Oh, look at those nice green bars right there. Woohoo! Yeah! Go higher. 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 Squeeze their beep. What do you say? We won't say squeeze their tits. We'll say squeeze their dicks off. Squeeze their fucking dicks off. Now remember, squeezing is not bullish. I think Binky was pointing that out earlier. It's not necessarily bullish. We're not above the hourly trigger. So don't ever see a price action like this as, hey, that's the bottom. I just explained to you earlier what it looks like and what you can trade within here to the half an hour and hourly trigger. Remember that there is a seller, and he is right here. You want to see where the seller is? He's right fucking here. The fucking seller is right here. And the seller is right here. That's where they are. Old Jim Bro. And young Jim Bro, they're right there. They're not right here though. They're gonna let it go up. They're gonna close their shorts, and they'll hammer. They're gonna hammer this again above. They're not right here. They're higher. They're getting their stops taken right now. They will make another attempt as we go up here. $100, 30, 1600. Right there. There's your targets. Just so you can see them. How much you want to bet that that and that match? This comes down. Right there. And this comes down right here. We're about there. Watch that close. Just a note here that Spicy McHaggis just let us know in the Discord that he's going to be about to be featured on a national videos on recovery, gratitude, resilience, and a potential book deal. Congratulations, brother. You guys are gangsters. Our Discord is filled with fucking overachievers. Should I put some music on for the Bulls? The Bulls like the music, don't they? Oh, wait a minute. I got to do it somewhere else now. Where is our jam thing? Where's our music thing? Where the fuck is the music? Where's the goddamn music at? Where's the goddamn bull music? There we go. There we go. Okay, hold on here. We don't want hip hop. We don't want lifestyle. We want genre. We can't. What's going on with this? What the fuck is going on with this thing? Genre. Let's say electronic. I like electronic. Worship music, maybe? No, we don't want worship. Serious, tense, sad, scary, dark, uplifting, powerful, epic. How about we just start with this? And I will keep the music low on your end so that I can listen to it and see if there's anything worth listening to. Fuck it, we'll just turn it on. Hold on here, guys. See if we can get a pump into the close here. What sucks is we've got a gamma dragging us down here. See this gamma here? Watch this closely right here. Watch this right here. You guys see that? They're really trying here. I want to hold this one right here. Let me turn this. Where's the volume on this fucking thing? I gotta turn the volume down in here because it's gonna crank.
Switch it up, I'm in my reverie, solo in my energy, sensing all your jealousy, take it. I don't care enough, I let it be, nothing off my memories. If I ever hit it, I'ma do my thing. Fear of missing out is scared of me. Where the fuck you been? Always gotta keep them wondering. What's the reason in front end? They look better on paper, I look better in person. It all works in my favor. It goes on. Switch it up, I'm in my reverie, solo in my energy, sensing all your jealousy, take it. I don't care enough, I let it be, nothing off my memories. If I ever hit it, I'ma do my thing. Fear of missing out is scared of me. Where the fuck you been? Always gotta keep them wondering. What's the reason in front end? They look better on paper, I look better in person. It all works in my favor. It goes on.
Just getting started, it's all part of the game. Building anticipation, getting close to the edge. Now you think I see you more than a friend. Better late than never. Now it's all over me. These reflections of you, who you want me to be. Do I wanna be you? Is it only a dream? To understand, just like the back of my hand, I can read you front to back. I could tell you want it bad, like it when you want it tag. Come on over, make me mad.
$2.02 a barrel, up 87 cents or 1.42%. NYMEX gasoline February futures settled at around $1.02 a gallon. NYMEX diesel February futures settled at around $2.28 a gallon. NYMEX natural gas
got you moving. I got you moving. I got you moving. I got you. I got you moving. I got you moving. I got you moving. I got you moving. I got you. I got you. I got you moving. 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 I got you. I got you moving.
Exploration. Contact voice news disconnected.
I got you moving like you're going to. I got you moving. I got you moving. I got you moving. Moving like I got you moving. I got you moving. I got you moving. I got you moving.
Song sucks. Fuck is this song? Fuck out of here with that song. Everything sounds like Stray Kids. Stray Kids sucks. It's like 15-year-old girls. That sounds like some fucking K-pop. That's your 15-minute buyer right there. Dude, what is with this music? This is all fucking K-pop. What the fuck is going? I don't want to listen to K-pop. Can I like delete K-pop from this shit? Oh god, K-pop's poisoning EDM. Gross. God damn kids. Yeah, that's more like it. Yeah, get those green bars up there. Get in there, pound it. You know you're going to explode higher. We just held the 15-minute. This next 15 minutes should go fucking vertical. Do it. Squeeze! You know we're gonna squeeze. We just held the 15-minute. Give me the next 15 minutes as green bars, bitch. Do it. Oh God, more fucking K-pop. Goddamn K-pop. Before we even get there, I can hear it. More K-pop. No more K-pop. God damn fucking Scrouge on Mankind K-pop. There you go. That's good. That's better. It's better. It's better. It's getting better. Get all stupid here. We know we're going up. Squeeze their dinkies off.
I just wanna have fun, turn around now, turn around now. I just wanna have fun, turn around now, turn around now. I just wanna turn around, dance. I just wanna around now. I just wanna have fun.
God damn it. More of that fucking, more of that goddamn K-pop. That's it. I'm going to go on to that fucking bunch of 15-year-olds making AI music. Grumpy old man, boomer over here. Now I'm becoming a boomer, finally. Good. Give me that K-pop voice. Oh, I already know it's coming. No. There we go. Bring my old school EDM back now. I'll take it. Just don't do that voice. Don't do that Stray Kids shit on me. I've been listening to that K-pop shit since it wasn't popular. I mentioned that shit on this show like fucking 5 years ago. I think my kid's been listening to K-pop now for like maybe 10 years. It's gotta be 10 fucking years. Oh yeah, there you go. Turn that shit up. Get out of here with that K-pop. I remember, like, back in the day, I asked on the show, does anybody know what K-pop is? Because my daughters, when they were really young, they got into that shit. I think one person responded that they knew what K-pop was. And, of course, it's my kids, so I have to be supportive of them and be like, oh, yeah, that's great music. That's unbelievable. Oh, yeah, Daddy loves it. Oh, yeah, definitely. Oh, yeah, keep playing. You want to take over the stereo in the car? Fuck yeah, it's yours. Oh, you want to play your music while I'm working outside on the house? Sure. They put the K-pop on. And meanwhile, inside, I'm like, this is the worst fucking shit I've ever heard. And then my kids are listening to it, and I'm like, wait a minute, they just stole that song from Wu-Tang Clan. My daughter's like, no, they didn't. I'm like, let me play it for you. So I'd press play on like an old Wu-Tang song, and my daughter would hit the stop button. She'd be like, stop. Oh, no, that's not true. You know, because Daddy's always right. I'm like, wait a minute, that's NWA. Sorry. And then they say this other word that sounds like the N word, but it's not. And I'm like, what did they just say? And my kids are like, it's not that word, Daddy. And I'm like, are you sure? And so I like go mess with my kids all along the way while they're listening to that crap. Now it's everywhere. It's like all the commercials. It's like everywhere. It's everywhere. Like the Stray Kids thing and all the other. Oh man. Nightmare. And I think BTS just announced their US concert dates. I was looking at the cost of that shit. These kids are out of their fucking minds. Yeah, get up there and squeeze at the last 15 minutes. We held the 15 minutes, so go up. And And then I'm looking at tickets for the World Cup. Oh yeah, that's right. Pump it, baby. Pimp it. Yeah. How those 688Cs doing if you're patient? 688Cs inside the Discord earlier. They were trading 31 cents. Now trading 92 cents on a high just then. There's your 300%er again. Oh, yeah. Yeah. And I'm looking at tickets for the fucking World Cup, and I'm like, I can't make the fucking World Cup tickets front fucking row, tier 1, it's called, I think. Same price as a ticket to BTS. I'm like, that is just wrong. That is just wrong. Like, I can go watch Germany play. I can watch like Germany play Netherlands for like the same amount of money to watch BTS. I'm like, no, don't want to do that. There you go. You guys taking some profit. Oh yeah. Savages up there taking profit. Look at that. You guys are savages. Pimp it some more. Give me more money. You guys are going to leave today and you're going to be like, fuck, he called a bunch of calls that are now up 5,000%. I was in the Discord earlier and I was like, you guys want me to trade for you today? Oh, I shouldn't say that publicly. I guess I should start doing that, maybe. Start trading for the Discord. Yeah, there we go. The thing that keeps on giving. Yeah, dude, that's what I'm saying, Donut. That's not a goddamn joke. I need to meet somebody. Not Asin. I wrote Asian wrong too. Sorry, my buddy here is one of my friends is Asian in here. Sorry, my buddy is one of my very close friends is he's not Korean though. So I'm fucking with him right now. So bad. Oh man. Wait a minute. That's what he is right there. Yeah, that's what there's the nice big A right there. Do you see it? Now watch this right here, okay? Because they're gonna try to liquidation you, break you here. See this light here? So they're gonna try to just flush you out of this trade right now. You gotta watch this right here. Watch out for the flush. Well, I always go to like doggone it, and I know that I know what the real nationality is, and I'll ask him questions about other nationalities intentionally just to piss him off. He doesn't bite on it though. He never bites. He just gives me the look. He's like, motherfucker. I'm like, I know. Because I know people are like, the people are very fucking racist. They're fucking idiots. Be careful there of a flush. Just watch this closely if you're trying to get back in for this next pump, this next leg up. Because they will flush you out of this trade. Watch this right here. See these white lines right here? So that the trade started down here, it goes up here, and they're gonna try to flush you out of this. They'll try to take all your, if I was a dealer, I would try to take your stops and then make the next move up. Now, if they flush you and the buyers disappear, say they flush you out of this, if we make a new low, then we will go to the downside, but we're not there yet, so don't worry about it. Dug on it. Well, people are fucking dickheads. I feel like Asians get a real fucking short end of the stick in this country. It's like okay, it's okay to be racist in a lot of ways still today to Asians, which is not right to be like that at all. But I always fucking rib them on that shit because the way people are, they're dicks. Fucking wrong, man. I can't believe racism is still like a thing. I've never understood how that is. And it's like that even worse in other countries too. I've experienced it in other countries. I've experienced it in other countries where I've gotten the pass because I'm Caucasian. That's fucked up too. Let's be racist together. You're a Caucasian, you're fine. I see it. You know what I see in Detroit a lot? I see it's really bizarre. I see it's not all the time, but I'll see things like minorities that'll want to gang up on another minority. I see it against African Americans, black people here. I'm not going to name the other minority, but they're like, "Oh, it's you. It's a white guy," and I'm like, "What the fuck are you talking about?" Well, you've been hanging around a bunch of fucking white racists around here. I'm like, black guys are my friends. Like my fucking, some of my best friends are black. Get the fuck out of here. Like Michigan has a lot of like closet, or it's got a lot of racism from white people. Michigan, man, I experienced more racism in Michigan than I did in South Carolina. That's fucking crazy. I expected to find more racism in, my dumb fucking person. I thought I would see more racism in South Carolina. Michigan, man, and like they do the closet racism shit where or the closed room. Oh, it's a bunch of white guys in here alone. I'm like, dude, don't do that shit with me. Like, I don't care if there's fucking just 4 white guys alone in a room. I got no time for that shit. I got zero. I served in the military, man. I lived with black men. I got no time for it. No time. But I noticed it here in Michigan pretty aggressively. Probably the least racist place I've lived is the West. Not necessarily California, but the West itself was it was the only place, or not the only. I grew up in Boston, right? Boston was a weird place. It was called racist when I was young. It may have been. When I was a kid, no one cared what your race was. They didn't care. They cared more about your religion. There was a lot of religious hate where I grew up. Like you had to be a certain religion. As far as race, when I was a child growing up, no one cared. They just cared about where you lived. What part of town you were from, what block you were from sometimes, more so than anything else. But I know that there was a lot of racism in Boston before I was conscious of it. But I never experienced it. Not like I did moving other places. The least racist place I've ever lived was, believe it or not, the West. If I was in a room with all the doors closed with like 4 white guys, if you were racist, they would ban you. You'd be shunned from the group. One of the best places I've ever lived for that was the West, not the West Coast. I have some experience in the West Coast, but I can't really speak to it. I lived in California for a bit, but the West itself was very. I didn't find it, and they were in transient communities that I never experienced it like I experienced it moving back out to the Midwest. Midwest has been a tough go for me. yeah, Midwest for me has been a shocker in terms of like racism. It's not everywhere here. I'm not gonna say Michiganders are racist, but I've noticed it more prevalent here than other places I've lived. Especially the quiet stuff in the background. That's the one that gets me even more than a racist is the quiet racist. Like the ones that won't say it publicly. That shit bugs me even more than a real racist. Like a public racist, you know where they stand. The ones that don't say it publicly, like my fucking grandmothers. Oh man. See, this is the flush right here. Watch out for the flush. When I was a kid, growing up, I did have racist, like, you know, just like the old school fucking bullshit racism. I never understood it. You know what else is crazy too? I got something else crazy for you. I had when I was young, I had an aunt that was gay, and I love her deeply and dearly. Watch this closely. Here. See this double right here. You see this plunge right now in this chart right here. They're trying to flush, and if they get the new low, we're gonna roll to the downside. Just watch this closely here. On the see this where must hold for more uppies. See it right here. Trying to flush us down right now. Now, when I was a kid, my aunt, I loved her dearly. She was gay, and she had a wife. And my own family, it was really weird. My father and mother taught me. They're like, your aunt is married to a woman, and so I didn't grow up not liking gay people from a very young age. But what was really weird was that my family was still like homophobic with everyone else. And it was really fucking bizarre. I never. Oh, look at that. Yeah, there's the flush. See it? Now we got to see if they get a new low or not. See that? That was nasty, right? You don't want to be short because of that right there. Do you see that? It's just a flush. Do you see that candle? See how they flushed? Come right back. They did this earlier too. They did this when you guys were panicking earlier. There's another flush over here. This was a flush right here. So this was the bottom. And we went up here and made the high. And they flushed. And then came right back up again. And continued higher. That's a flush right there too. Over there. I never understood that about my family growing up. Because I grew up I grew up at a time where a lot of change took place in the United States. There was like, it wasn't like when I was a kid, it wasn't okay to be racist. It wasn't okay to hate people for their religion any longer. It wasn't okay to hate people because of their sexual orientation. At least where I grew up, it wasn't okay. It wasn't okay in my family, but then there was still residual stuff. Like they're fine. The gays in our family are fine, but the rest of them out there, not so fine. It was really bizarre, and I wasn't that kid. I was a product of like the '90s, and if you don't know what a product of the '90s is or was, it was one of the best times to grow up in the country. Like I was a kid then, like I was a teenager in the '90s. Everything was hopeful. Like we would solve everything. We would solve global warming. We would solve trash. We would solve throwaway culture, consumerism. We would do away with war. We would like the wall had fallen in Europe. It was like post hippie. The hippies were becoming like yuppies and shit, and they were starting to change. And we grew up in this very like when I was a kid, right? It was everything looked up. Everyone in my school, we had kids in our school that all they wanted, everything was like, everyone was positive. If you were a child of the '90s, you remember that. Hopefully, you remember this. There was a really like I remember being a kid in the late '80s, and that generation was like still stuck in the '80s and '70s, and the kids in the '90s were like, everything is looking up. It was a great time to be alive, and so now being an older adult, and seeing where we are in the world, it's disheartening. It really is disheartening to see. Some of the reversion that we have in the world today on that stuff, you know, like racism, religion, and creed and origin, and your anything. You know what I mean? I don't know why we're there today, why that pendulum swings back and forth, but man, if you were young right now and you grew up in the 90s, you would have fucking loved it. It was fucking baller. And then sometime around like 2015, 2016, it started. There we go. Squeeze them. Yeah, keep going up there. Keep on going up there. Oh, fuck yeah. Take all their money. Yeah. Take all those bear money up there. We're almost at FOMOville. Not quite there. Almost. Almost there. We're almost there. Let me bring that down a little tiny bit. Yeah, keep on going up there. Keep on going. Keep on going. Keep on going. Wait until I tell the Discord to sell. Guess what my calls are at right now? $1.44. There you go. Don't worry, Discord. Oh, dudes, WTI just got shaked again. Shanked again. And there's more to go up. I just don't want to trade the FOMO with you, okay? The FOMO is best left to FOMOers. But there you go. There's your middle leg right there. There's your big printer, and the rest of it above. This is where FOMO lives. Now we can go up there, but you know, I tried to express to you earlier today where the easy money is. The easy money. All right, everybody happy again? Everybody happy today? Oh, man. Yeah, there we go. There's PT1 right there. I even draw it out for him. PT1, PT2. Now, normally, I don't draw this stuff in the show anymore. I used to. I don't do it anymore. So I did tell the Discord about this earlier. What I'd also said about this for the Discord was that your mind should do this. You shouldn't need any of that. Shouldn't need any of that. You can do it just candlesticks, but you know, we're trying to teach people that can't read with crayons. That's a 500% trade, boys. I don't know. That's pretty good goddamn trade. Pretty good goddamn day. Of course, my put over here is getting annihilated. My protective put on my long forward call or forward underlying. But whatever. It's all right. It's whatever it is. What did you guys do? Oh my God. $30,000. Fuck yeah. Woo! Oh, his paper? God damn. Someone made 1,400%. Fucking A, man. Hell yeah. Congratulations. Congratulations. A little bit of patience, right? Don't get shaken out of your trades. Got flushed. Didn't make a new low. Did not close the trade until it was time to close it. Nice patience. Patience opening, patience closing. Follow your rules. Be a well-disciplined trader. And that's where the FOMO lives, up in here. Remember that if you're a call seller, you know where you're going to be trying to sell calls is up here, right? Look at all that big gap left up there, juice up there. You see that gap? Bunch of gappy gap up here. It's a good learning experience. You don't need, hey, if you're not trading it, you just watch. This is why earlier when I was telling you about the rules, like you need this and that and this and that to happen. The same thing with this downstroke. Like you needed to see the second downstroke to close your long. Does that make sense? Even on the second downstroke, you're given another out. Like they literally let you out of your trades, even if you get cut up a little bit. They'll give you outs. Like they'll show you the first downstroke, then they'll show you the second one, and then the buyers will give a small green bar. It's like this down here. You make your first low. This is the first low right here. Do you see it? Hold on, let me show you this. So you see this first low right here? They will make the second low and then usually give you at least one more out right here. So you can so you get your first low, your second low, and then you're literally given a chance to get out of your trade before the roll down. So you have to follow those fucking rules. That's why market makers do. That's not a dealer like a dealer. That's a market maker doing that. I should have clarified on that. That's not a dealer. That's a market maker dealer. Dealer market makers, they'll take your stops and then they'll run it up or down. They do it on sell side too. They'll squeeze it up, whoop, take your stops and then slam it down. Same concept in inverse. So you got to have the double tap. So this has already been made, just so you know. That's already done. It's this one now is your next one right here. Your PT2's up there. You really got to be disciplined out there when you're trading. You got to understand, like, you don't want to be listening. You want earmuffs on, blinders on, and trade the price action that's in front of you. You do have to be aware of that stuff, but I shouldn't say you shouldn't listen to it. When I say blinders or earmuffs, I don't mean that you're not aware of the news. You need to listen to the news, but be able to material and not material. And 90% of the news is not material. So when you hear people say things like, what about this? What about that? What about this? You need to, on your own, kind of have a barometer of what is material to the market, what is not. What is used as an inflection point information or news or data. If we're blasting down, if we're blasting down, just down, does it really matter what the news is? We're probably going to bounce, right? If we're up, and all of a sudden good news is bad news because we're on a high, right? So I guess maybe some of it's a little bit different. There's material news, and then there's inflection point news, and then there's a lot of noise that is meant for you to meant to impact your trading. your price action based trading, and all these rules and tools are all based on price action trading. And you see they're doing it again. You see them right here. So like we hit this one right here. So we hit this one right here. Watch, boom, price break, right? Liquidation break. We hit our next target. Boom, price break. So this is called liquidation break. They're taking your stops. Now, you want to so they come down and take your stops for the next trade, right? You can do this in any time frame, right? Any time frame, hourly, 4-hour, daily, does not matter. But we're trading zero dates, no intrinsic value in a zero date. But look at this. So we come up here, right? They're gonna try to take your stops here. They could stop here, but they could plunge it. Now, do you get out there? No, you have to see the next one right here, and then the roll. And in here, you'd be like, okay, I'm going to try to take a call or whatever. I wouldn't be taking a call here, but you can usually see it like whipsaw and then up. And you'll see that new high, and then it's up here. Right now, you should stay long. Well, I shouldn't say you should stay long, but the easiest trade is done, I should say. I'll rephrase it. The easiest trade is done at this point. The rest of this trade, your averages go down in win percentage. It's not as easy. And this can do it, but your win rate goes down significantly. It's at like a 60% right now. It was at 90 earlier, 93. It's at now at like 60-ish. I wish I had a program that would show you the percentages for each move. Like it would pop up and disappear and pop up and disappear. I do it in my head, but right now we're at like 60%. If we blasted through and made that low right there, I would say it's like 40%. This is like 30% and like 15, and then you start dumping down there for more up. And then of course the opposite side of that is the flip side holds true for the sell side of it. At any rate. What? Are we buying 688Cs here? Personally, it's like for our trading rules, you should be out right now. You should be done. Do you guys want to know why that is? I'll show you why that is. Hold on here. I'll show you why right now. So you're coming into the daily trigger, okay? Let's just delete everything here. So let's look at what happened in the past, okay? You can just simply look at this. So we have the rejection on the hourly or the half-hour trigger right here. What was the result? Down, right? We went back up to test again, and notice how we didn't quite get there, and the answer was down, right? And we know that Elliott wave doesn't have an edge, right? We know that a lot of stuff doesn't have edge, right? We want edge at all times, right? So we want something that is quantifiable, that has an edge. So let's just look at this real quick. I said to you the easiest trade was the liquidation break, right? And we take this one up right here, do this one right here. This is your third leg. So you got 1, 2, 3, 4, 5, and 6, right? So this is your 1, 2, 3. It's harder to show, but 1, 2, 3. Excuse me. 1, 2, 3, 4, 5, right? This was the first leg right here. And then there's another 1, 2, 3, 4, 5 in here. It's here. Yeah, you got this one right here. Wait a minute. This one right here, this one right here, this one right here, and this one right here, and this one right here. But the problem with this is that we're underneath the half-hour trigger. And this is the hidden hand of the market. This right here is what most people do not account for. When you see like bear flags and bull flags, It's usually something like, let's say you have a bull flag, right? And you're thinking, this is gonna go up, right? And you don't see that there's a hidden hand of momentum in the market coming down. That's the half-hour trigger. And this is the hourly trigger. And if velocity is still extremely negative, you'll end up seeing this fail. This will end up failing. You'll be like, oh, Cap, this traditional thing said it was going up. And then this is the momentum that's very negative that no one sees in the market. So my rules here are what? Like this looks like it should go up, right? You got the prior high right here. We beat it. Right? Here's your low. There, right? So theoretically, the trade now is what? If you didn't have triggers, the trade, you'd be looking at this and saying to yourself, okay, so I got the low, I got the prior high right here, right? The next target should be somewhere up in here, right? And you've got, you see how you've got an Elliott wave here, right? Just like that bear or bull flag. And so you're like, oh, we just did this one. Everything looks great. And all of a sudden it fails. Let's just say it fails, okay? And you say, why did that fail? I have a low. I've got the beat the prior high. Why did that Elliott wave fail? Why did a racer gang have to break out their erasers again, right? So for me, what I like to see is what? I've told you this earlier in the show. I like trading that, right? I don't like trading this. I wouldn't mind trading this right here for a minute or two. Potentially could trade that on a 10-second chart, potentially. Not worth it more than likely. So why do I say you want your two peaks? You see it now? When I say you want to get above the hourly trigger and you want two new highs, right? I'm like, hey, you want to see two new highs and you buy the back test, right? So you got 5 legs up. If your back test should be 1, 2, right? And should be higher than this one right here. This is your corrective move. This is red, or green, excuse me. This is gray, right? And you're higher than this low right here. And this should be your all clear sign right here. A new all-time high, right? It's a pretty bullish thing right here, isn't it? And not only is that bullish, but you have a prior high right here. Prior high right here, right? So your next term, 1, 2, 3, 1, 2 right there, you got the new high, right? This is a bigger 1, 2, 3, 4, 5, right? So this is what makes this so like for continuation is my point, like continuation up there. So let's get rid of all this for now. Get rid of all this for now. We're not there yet, are we? Right? You don't need it all. You don't need to be timing bottoms, any of that. You don't need to care about that. So let's look at this real quick. This is where the danger is in here, right? This is where the momentum is still negative. Now let's look at a 30-minute basis for momentum and see what we can see. And this looks pretty good. I'm going to be honest with you. Now, this looks pretty good here. This looks pretty good right here. But let's see this. What's this right here? You see that? What is that? There's a little bit of negativity there. You see that? A little bit. I'd really like to see that back test up there and all that. It's constructive, but it's not quite there yet. Your half an hour looks great. 15-minute looks great. But I want to see like new lows, like new. I want to see like a low put in. This down and higher than this one. Some like firm back test on higher frames. Hourly, half an hour, right? I want to see that on a half an hour. So where is that? If we're back testing hours and half hours, it's up here, right? I want to see these hammer out, right? Hammer, and go higher. So I think there's danger in here personally. You may be like, hey, crap, well, this is the second leg, but the triggers and the velocity and momentum is what I'm afraid of here. I'm afraid of that. The hidden hand of the market is what I call it. So should I take this trade here? You can. It's not that you can't. And there's a smaller 5-wave structure in here. It's not like you can't. There's FOMO. I said FOMO lives in here, right? FOMO lives in here. Sorry, hold on. FOMO lives in here. Why? Why does FOMO live there? Because we can squeeze up here and extend this first leg and then flush back down to the downside. So I'll get rid of this right now, the moment, and I'm going to say this to you. Okay? If you see price on its own, we took this this is a beautiful leg, right? We took this gorgeous leg down here. We made a bunch of money. We're going to stay out of the way in here in case we get some liquidity grab to make another leg lower. We're also going to stay out of here because there's a bunch of traffic, a bunch of sellers, right? They're still going to get into this whether you like it or not. Even if we squeeze above, there's volatility here, right? And what we're looking for is to buy a 2-move up back test right here. Oh, wait a minute. We're going to look to buy this. Oh, sorry, that was wrong. We're going to wait for this right here. Somewhere in there. If we can get that right there, we're going to buy this. That's it. We're just going to wait for that to happen. If you do this, what you've done is effectively taken their stops. Effectively, you've taken their stops, and you're going to be given a chance. They're going to be given a chance, too. If they're selling here and they get squoze out, they're still going to be given a chance to exit. It's not like just bears get fucked. Bulls get fucked, bears get fucked, but both are given opportunities to get out. So you don't have to like, what if you're wrong in here? It's down. What if you're wrong in here and it's down? Like, there's no point in getting long in here. It's still going to come back down to you to get long. Once they tell you get long, you're going to go up. So you can do this with options, futures, whatever. But if you wanted to buy the market, it would be up here. So we're going to take a look at this. And we're going to go back. And we're going to look at weekly. Let's just take a quick look at this. 3:28, half an hour left. Let's take a quick peek at here. You're going to get someone that's going to tell you at the close today that this is a spitting top. Did you see that? That's a weekly spitting top. Do you see it? These are considered, you're going to get a bunch of bears out there saying, this is bearish, and we're going to go to the depths of hell. These don't work anymore. I'm going to tell you right now that these spinning tops do not work. Anyone that tells you get like a spinning top or you get like a big red indecision candle, this is a weekly basis right now. They're going to tell you it's bearish. Now I told you earlier this morning that we have opened the door to 475 down here. And that is why that is, when we hit this low here, we opened the door to this 475, not 482, 475. We've opened the door earlier, and that's what this spinning top on a weekly is showing. But it doesn't make it guaranteed. Just because we open the door doesn't mean we go down. Now we're going to look at the daily here. On a daily candle, they're going to say, oh, there's another spinning top right there, another one right here. We're going down to the depths of hell. And you can kind of see where the door is open now. It's right here. Door is open. Does it mean we go down? Not necessarily. What, in my view, do bulls need to do? From what I just showed you earlier with triggers, They need to quickly get above and back test, right? So on that hourly basis over here, what did I say bulls need to do for you to get long? I said you need to get up here. Shit, hold on. I said you need to let the FOMO gang get you up here. And then we can talk about taking a long, right? Does that make sense to you? We can talk about taking a long in here. So let's go back to the daily again. Get rid of this. We know we have the door open to go lower. We also know that there are buyers that stepped in even though the door is unlocked. So we're going to make that one green. We're going to write daily in here because it's dangerous. Shit's dangerous. We're going to go back to a 4 hour. Oh, wait a minute. We're going to leave this up here. Sorry about that. We're going to leave this one right here because we don't want to see the door get closed. Make that a D. And then we're going to go to a 4 hour right here. Where's my 4? There it is right there. This is the fuck you, you shall not pass. And we have our, what did we need to do today? Let's just think about this. Has the market done everything it needs to do? Yes. Say yes, Cappy. On a 4 hour basis, you can see that we've gone high enough. We don't need to go any higher. See this white line right here? We've gone high enough. Now, we'll get rid of that white line. We've known we've done everything that needs to be done today. For the bulls, everything needs to be done. Now, let's look at this candle right here on a 4 hour basis. We have this candle right here. Right? Got this whole candle right here. If the bulls can get up here, this would imply what? That's 80% of this candle that a back test should be held, right? You can see it right here too. Actually, it's higher. Hold on. It's right here. Well, so there's 2 of them. There's this one right here, and there's this one right here. So you would need to see that tag and that tag right there. And there's your hourly trigger. So 1, 2, all clear sign to go up, right? So we're going to make this one right here a white one, even though it's a daily. We're going to flip to this right here. And you know exactly where we need to be. Exactly where we need to be to go higher. So I'm gonna draw this in for you for an expectation, okay? I'm gonna go from down here. I'm gonna go right here, okay? I'm gonna look for 1 right there, 2 right there. And then to 698. Whoop, right there. Why is that gray? Why is that not white? Shit's supposed to be white. Right there. Okay? That's what that should be. That's what that should be right there. Now, would I give you an outlook like that? Let me ask you that question. Would I give you an outlook like that? Fuck no. Fuck no. I wouldn't give you that outlook. That's a terrible outlook. Why? Why is that a terrible outlook? Because the sellers are going to attempt to stop in, right? So for an outlook for tomorrow, it would be more like this. Where were the buyers? They were down here, right? Remember that buyers were down here? They stepped in. Here's the next place they are right here. You see it? Right here. So I would actually draw this like this. Watch this. So I would draw this, hit that inflection point right there, right? and then down right here. I know that sounds shocking. And I'd make this what? Dotted. Right? Dot, dot, dot. Right? Or actually, I should change this. This is how I should draw it. I fucked up. My bad. That's a straight line. That's solid. Get rid of that shit. And bring this one back down right here. This here would be dotted. Do we have to get down there? Nope. We just need to hit this right here. We can get rid of this now. We don't need that here. We don't need that here. So right there, right? That's my worst case scenario, right? My next one's going to be a straight one right here. This is in a solid line right there. Get rid of these now. I don't care about the 4 hour. Then I'm going to draw this one down just like this. I'm going to teach you guys how to do this. Oh, wait a minute. Rid of that. I'm going to draw this one down right here. That one right there, because I already broke the white. I already know what's going to happen. I'm going to draw this one. It's flat. 698. And a half. Now, like just like that. That's how I would draw this. And I wouldn't normally show you this. I would normally show just this part right here. Solid line, dot, 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 by the dip again, up here, smash, smash. And then would start talking about drawing the rest of this out to recover this. On a higher frame, that's what it looks like. Now, what about those that say, what about the leg lower cap? So you're long right here, right? If we go down here and break through this, this would become a solid line, right? So let's get rid of this for now. This for right now. This is what I've got right here. Buy the dip, buy the dip. If, say, price were to go like this, so price fades down here, and we don't get a dip buy, like a new high or whatever. We went down here, we blasted down here. Oh, see, I would change my expectation of buying a dip, and then I would draw a straight line in right there. That makes sense? If the real price action was like this, I would just draw a straight line down. No dotted, just straight line. We're going straight down. And we need to also hit this high right here. Like literally to a tick. See that arrow right there? We need to hit 690.63. That's the exact number we need to hit for this to continue to be true, in my view at least, in my estimation. Now I'll go back and show it to you again. Hold on here. Move everything. Oh shit, I got rid of the weekly. There's your week. That's 675. There's your day. We took this one out right here, so we don't need to see that anymore. There's your day right there. I'm pretty bullish here, but we still need to see it. There's your day. We'll leave this daily up here so you can see it. Do we touch it or not? This is for your 4 hour, not your daily. We'll just draw this in so you guys know it's 4 and not daily. We have a halfback trade right here. Right there. You got to hit that daily target right there. You got to hit this one right here. We haven't hit this yet, have we? And this is the zone right here. These are the two that you need. This one and that one above the hourly trigger. That's the one that you need right there. How do I make that how do I explain that better? Bull's safe right there. Somewhere right over there. Bulls are safe. You can see it you can see that hourly trigger as it just goes up. Right there. See that half hour trigger right there. You're not above the hourly trigger there, so you are above it here and you're above it there. Whatever that back test is right there is what you're buying right in there. Now this down here, I will say this on this. I should bring that down there. Go all the way down there. You can go all the way down there and still be alive. I can't fucking hate drawing this shit. It's a pain in the ass drawing this shit. Like, why is he mad about drawing this stuff for us? Because I fucking all these stupid fucking lines. There's that gap. And see how they're selling this right now? See the danger that's in there? See how they're selling this right now? Told you earlier that there'd be sellers here. This is the hidden hand of the market. Look at them, they're pounding it, pounding it, pounding it. Now, if we give up this this one right here, if we give this one up, see it coming down right now? If we give this up, I will change my outlook from where? From this? My outlook's not actually this right now, but let's say we come back down here. When you violate this, where would the outlook be? Down, right? Close that out, and then we're out of here. But for right now, no. As long as the bulls buy this dip down here, I'm still bullish. Still bullish right now. All that for now, just because you don't need it. Oh, shit. Let me go back. I want to show you something else here. If I was giving you a 4-hour outlook, right? If I were to give you a 4-hour outlook, it would look like this. Just so you can see what it looks like. You see all the movement that goes on just in that 4-hour? Make any sense to you guys? So if we were on we had a new all-time high, we had 6998, so I would assume that we'd test this. And I would also be looking at this like this on a 4-hour basis. The line would be more like this. Even if we never hit it. That would be a 4-hour expectation right there. Even if we just hold this and go higher. Even if we go up here and hit this, right? Even if we grind up here, even if we go up here and blast down here, like the 4-hour is a much bigger expectation with a lot more room. You know, these fucking bears want this right here. I don't. I'm looking at OpX right here. Oh, there's OpX. I'm looking at that right there. And then I see the down move over here. I see the jackknife right there. There's Vixpiration. Right there. That's how I see it. Something like this. Pin up here, and then it, whoop, and then down there. You know, these fucking bears, you know what they want, right? They fucking bears want this. Drag your ass down here, not print any of those 7,000 calls, and then allow you to print the 7,000. That's what they want. They don't want to print the 7,000 because they sold them to you. And those are right here. Oh, come on. Come on. See this right here? That fucking thing. The person who sold these will do anything to expire worthless. Make sense? Whoever sold these right here, it's not like we're bearish or anything. They just don't want them to expire. They just don't want them to expire in the money or expire in the money at zero. Does that make sense? So like the 690C we were talking about earlier, zero, right? End of that trading session. So your OPEX is where? Your OPEX is right here, right? So if we were gonna go up here, what does the seller of those calls want? What do they want? Well, they want those calls like the better, like the bet down the better, like nowhere near this, right? But you get that Vanna and Charm and stuff. As we get closer to this, it doesn't matter. You can close at 698, and those 7,000 calls will still be zeroed out. Does that make sense? So you get the call seller that's screaming at you, dude, we're going down, bro. Down, 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 down. That's all they want. The more down, the better. But the reality is that these 700s, as long as they expire worthless on OPEX, they're fine. What else do you have to think about here? Month end, right? So you get close to month end. There's a bunch of 7,000s there too. So you have OPEX. And then the call seller for 7,000 is begging and pleading for Vixpiration to do its job. Right? Here's 7,000. Or roughly that. Maybe 702 is 7,000 on SPX. Mostly SPX and futures and stuff, but this is where 7,000 was on futures. 6.9, I think. 8.8 or something. It was something like that. So what do? They come in and unload in the market, right? Fuck you, no, you're not going up there. So you go back up here in OPEX again, and it's fuck you again, right? You've got Vixpiration on their side again. No, you can't pass. And they'll do something like that over here too. But you get that Vanna charm, as they call it, and there's an unwind up here, right? Month end, like an unwind here, an unwind here. And the big problem right now is this right here. Oh. Sorry. This is your big problem right here. And not only is that the big problem, no one's rolling higher. There's no reason to roll higher. We need a reason to stop selling these and start selling these. Does that make sense? So I've closed the calls that I've sold at 7,000, and I now want to sell 710s, 720s. So I don't care anymore if we go up, Vanna Charm, right? So for right now, we have a problem with market participants not believing. No, they believe we can go higher, but they don't believe they should roll their calls higher. I'll just do something in the money, man, or I'll get a spread. So wait a minute, I got the wrong trick. So I want you to remember the key or the top line takeaways here. Top line takeaway here is until we can find a reason to roll higher, you're going to get parties that are going to tell you the way is lower. And they're going to tell you that until either the 7,000 rolls off on OPEX and on month end, or the market has a reason to go higher. One or the other. And sentiment is the same way. I think you can get up here, even though it's OPEX over here. I think you can get up here in OPEX. I just don't know how high you can get. So it should be something like this. Should be something like a larger frame. Should be able to get up in here. Right? And then you dump somewhere over here on OPEX. Show it to you here. And something like this. That make more sense? Something like that. Up there, up here. And what are we waiting for? We're waiting for some catalysts, right? So we didn't get Scotus. We didn't get Scotus over here. Hold on a second. We did not get the Scotus. Did we? We didn't get the Scotus over here, did we? We front ran it. We didn't get it today, did we? Or we should have got it here, right? No Scotus, blast it down, right? So we need a reason to roll higher. What else could send us higher? Earnings. Now we can start coming into TSM. All right? So we have enough room now to price in TSM earnings, right? Plenty of room in here to price that in. So you got no Scotus. You got TSM. This could run TSM on just fine, right? Come back down again for expiration. And then we have a new round of tech next week, right? Netflix. We're now lower for Netflix earnings, right? And we'll also set up Scotus again next week, won't we? I'm assuming. We might get a decision next week at some point. And so this is more a function of trying to keep price lower until you get the need to roll higher, or until sentiment gets bigger and better. So, you know, it's something like this right here. You can kind of see it. Something like this. There's month end. Not many people have calls above 7,000 into February and March. I remember back when most people were opening their 7,000s for December and January. My calls that I have, my call spreads are for Feb OpEx. So the unclench should be able to happen. The real true unclench should be able to happen into February, right? You wipe out all those calls from October, November, December. You can then unclench and moon, right? You can then roll higher. And then what are they going to do then? Oh my God, we're up there at 7,000. I'm rolling to 710, rolling to 710, 720. What do they do up there after the first week? What do they do in that unclench? They're going to slam you back down again, right? I'm going to slam you down for February. And maybe that's the top of the market, or we'll set it up again for March for 715, 720, 750. I think we can get to 750, believe it or not, way up here. But you know, every fucking month for January, February, it's like you reset the whole entire thing again. Like, even though you have that outlook, it's like every month in January, February, March, it could be January is the top, March is the top, February is the top. It's going to be one of those months. So we'll reset the entire thing again. You know, you have some bad news or something. Like you unclench up here, let's say you trade 705, right? You know, you do the 705 and something fucking crazy happens. It's Wednesday, Thursday, Friday. 1600. Right there. There's your 705. Does that make any fucking sense? Maybe it doesn't. I don't know. There's your OpEx close. Your expiration comes into play. Should be more like this because it should be more like this, but it's something like, I should probably draw this. Probably something better to draw it like this. There, down, and then up. I don't know when this expiration shank is. It could be the day before. It could be like Monday. It could be expiration day. It could be 1600. But in there, you should expect some kind of a, you know, weakness. Call sellers unite. They're all fine. Now, let's say we get a Scotus thing, and Scotus strikes it down. They would be, you know, not fucked, but, You know, those 7,000s for February to be fucked on. But the 7,000s for December, January, not so bad, right? Most of them, like 3/4 of them, are probably rolled off by the time we get to OPEX. We're like waiting for like another quarter to expire on the month end over here. So it's like give or take, you know, it's not exact science or whatever, but you know, people get fucked when they sell options too. But anyways, the way is higher. The way is higher. You're likely not going to get over. You're likely not going to get over this. And you'll likely get dumped on down here, and we'll likely close this gap. Now, can we close this gap down here? Yeah, if we lose this, we close this gap, but you know, we close that gap, man. It's gonna be a straight shot up there. So I think we go higher. At any rate, we hit it right here. You see us? We hit it. We did this already. I think we did this earlier today. So next stop, we should hit this. Next target is 692.23. And then we should hit this one right here, 693.38. And we should be able to buy the dip and trade this into OPEX. Price target, OPEX 698.50. Somewhere in there. Right there. 698.50. We already did this move right here. You see it? I'm going to show it to you here. So this is already done. Whoop. This was this right here. That was all that was needed. We hit our target. See the target right there? We hit that just perfect near a pin strike. So in a smaller time frame, you should see this one get hit. Grind. Your next target is 692.08. Next target after that is 693.22. And then we'll go higher. So ready? Where's OPEX? Is your expectations? Right there.